Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Oh, okay. Is this live? I'm brand new. I'm brand new to all this. So this is there it is. All right, there it is. How you doing, Chandler?
Hey, I forgot to mention, if you want to share your screen to show anything,
Yes,
there's a button
absolutely.
that says present down at the bottom.
Yeah, I got you.
And I meant to mention that before we started, but hey, everybody, we got a new guy on today. This is
As you can see, I'm a newbie here. All right, appreciate it. Thanks for having me, Chandler.
All right, have a
My
good show.
screen just got shared there. All right, perfect. All right, so they're giving me the whole floor here. Awesome. So good morning, everyone. Welcome. Let's go ahead and I'm going to go ahead and break down some Forex, and then I'm going to take a look at some futures this morning. Now we do have FOMC at 2:00. So I did tell a lot of my students this morning, as I have my own VIP sessions in the morning, I did tell them that we're going to see a lot of manipulation this morning. So I'm not going to be trading futures probably till after FOMC, and I'm going to explain that a little bit after we talk about some Forex here. So I did take some setups here in Forex. I do look at a few pairs here. I'm going to go ahead and take a look at some of them. The first one was the New Zealand CAD. So let's take a look at the New Zealand CAD. And for those that don't know me, which none of you do, I am an ICT trader. I do trade market maker buy and sell models. So I look for those type of models, and I use external and internal liquidity ranges to go ahead and target those areas. So what I do in Forex is different from what I do in futures. How I trade in Forex is I look for the external model, and we use a strategy called dollar cost averaging. So I use position trading towards the external draw. Okay, and I'm going to go ahead and explain that here on my chart. So let's take a look here at the New Zealand CAD. And the first thing I want to do here, looking at it, I want to look at the higher time frame. So I like to go the weekly and the daily, and I kind of find the external model here, right? And I'm going to show you how this model is identified. So first thing, I look for, and there's four reasons why the market moves, right? And one of the reasons is, I think I actually have it here. Let me go ahead and place this right here. Let's go ahead and, oops. All right, so four reasons. Number one, price generates liquidity. So where was price generating liquidity in this model? So we had a nice expansion move here, and when price was retracing back to equilibrium of this price leg, that's just one of the reasons price does is rebalance to equilibrium. We had price generating buy side liquidity, okay? And all this buy side liquidity is resting above price action here, and we look for price to go ahead and sweep these areas. These are key areas that price wants to sweep, is liquidity ranges. So first thing I look at is, okay, we have this expansion move to the upside. We then had price come back and rebalance this price leg, okay? Meaning that rebalancing equilibrium is 50% of this price leg. Then we also had price move into a breaker block, okay? For those that don't know what a breaker block is an order block that failed, meaning that price ran above this order block and it failed to reject. It displaced through this area. Okay, so this becomes a breaker. This is an internal liquidity range, meaning that there's resting sell stops here. Okay, the retail traders that are buying in this expansion move are resting their sell stops here. Price will come here, run those stops, and then continue to move higher. And those are the key areas that I'm looking for in the market. Where is price running stops? Where are the stops resting? Liquidity, right? Where's resting liquidity? So looking at this external model, I'm building my bias and I'm looking at this expansion move, and now we're looking for the rebalance. We've got the rebalance. We got price rejecting out of this higher time frame breaker. This now indicates that sell stops has been taken. And what do we see here now if we zoom in a little bit more into this internal model? What do we see here? We see price displace, okay, displacing out of this breaker. So now it's confirming that we've ran liquidity here, we've displaced, and we create insufficiency. Now I want to see price come back to insufficiency. What is the other reasons that price does? Rebalance insufficiency. Price came back to rebalance insufficiency, and this holds as support. And because we were respecting this bullish PRA, this gives me more bullish sentiment. So what I've been doing here on the New Zealand CAD is I took a buy setup here on New Zealand CAD. Let's go to the daily now. Now let's start looking at the weekly. The internal model here. So looking at the internal model here, and let's see. Okay, I'm starting to see the chat now coming. I was wondering where the chat was. What is okay? Sorry, now I see you guys' chat there now. Cameron is new, never seen before. Yes, I am new. What is insufficiency? Insufficiency is when price creates fair value gaps. If you don't know what a fair value gap, it's an imbalance area. Price was imbalance. We had this expansion candle that created insufficiency. It's a gap. Okay. This is where price wants to rebalance insufficiency. Okay. It's a fair value gap that was created. So here we have this daily fair value gap. And now we zoomed in, right? We've zoomed in. This was the buy side imbalance. This was we call it buy side imbalance as well because it's a up close candle that created insufficiency. So it's a buy side imbalance. So this buy side has been rebalanced. Okay. And what did it do? It respected these areas. How can you tell? Because we're displacing out of this area. See the displacement? Displacement is these big moves that create insufficiency. See that? So you can see it's displacing out of that area. That just gives you more confluence that we're bullish, right? So now we're looking at the internal model. So we got the weekly outcome, right? We've got the weekly outcome, and now we're looking at the daily here, and we're looking for the internal model. And now we're going to use the market maker buy and sell model. So what we have here, for example, let's take a look. We had sell side of the curve, right? This is the market maker model. We have sell side of the curve, meaning this is the downwards movement in the market. Came back to what? That key area that we just talked about, that we looked at, the buy side balance on the weekly. And what happened? Price displaced above it. Displaced. And what do we have here? We had an energetic move to internal liquidity. When we see these energetic moves, right, where price displaces like this to a internal liquidity, and we reject out of this area, this gives you more confluence. This is a run of stops. Price is running sell stops to continue to push price higher, right? This is how the market moves, right? It's all about liquidity. So here was the displacement. There was the insufficiency. Price gave us more conviction as we respected that insufficiency, buy side balance, and we displaced again. Create another insufficiency out of that key area that displaced. Price came back. This is the internal grab. So this is what we did here, okay? As in my morning sessions with my students, we took a buy, and what I'm expecting is price to run the buy side. This is buy side liquidity here, and here's the external buy side. I'm expecting price to run all the way to this external buy side. We are on the buy side of the curve. We've been taking buys for weeks now on the New Zealand CAD and the Aussie CAD, and I'm going to show you exactly how the Aussie CAD plays. Cameron, more to internal liquidity. Cameron, more to internal liquidity, external liquidity range. So yeah. Yeah, so you talk about ILR, internal liquidity range. That's what the internal liquidity is. So what does price do in these models, right? We have sell side of the curve, buy side of the curve. Once we've identified that we're on the buy side of the curve, we're moving to, this is the external range, right? This is the high of this price leg, of this swing. This would be the external range. The internal range is the insufficiency, or you can call this these internal highs and lows, right? Internal highs and lows. But what we call this is a turtle soup setup. And this is how we kind of panned out these trades. Price will run to the external, but when price starts retracing, we're running to internal liquidity. This was the internal liquidity. This is the buy side imbalance, insufficiency. Price ran to this. Not only that, we also used equilibrium of this price leg. When we had this expansion move, we want to see price run back to discount. Discount is below the 50% discount. This is where smart money traders come into the market and they get price at a discount. That's why it's called discount. This is called a turtle soup. A turtle soup setup is when price draws to internal liquidity and then expands to the external. So once we've identified the draw of liquidity, where is price drawing to? We've identified this is the draw of liquidity. Price is drawing to this external. Then if price starts moving to internal liquidity and wants to grab internal liquidity before moving to the draw of liquidity, the external draw of liquidity, this becomes a turtle soup setup, sorry. And now if we zoom in, a model, everything is fractal about this. Everything is fractal. So here's the same setup. Everything is fractal. And I'm going to show you. Here we have an external model, sell side of the curve, buy side of the curve. And if we zoom in, here's the internal model inside another model. Let's go to the 4 hour. And this is how we've been now taking advantage of this buy side of the curve. All this is the same concepts in each model. We had price come back to that higher time frame, insufficiency. What did price do? Displaced. Create insufficiency. Price ran to that insufficiency, displaced again. There's more confluence that we're running to this external buy side of this model, the 4 hour. So we took a buy and we're running higher. Now, if price wants to run lower, if price does want to move lower, where would price want to move if it wants to move lower? Let's go ahead and run this low to this high. First notice that when price ran to this high, it never came back to equilibrium and it created insufficiency. Price never rebalanced insufficiency here. Oops. So this is how we dollar cost average, right? I have the draw liquidity. This is my buy side. This is where I expect price to draw to. This is the internal. And I expect price to even draw to the external up here. So I'm pretty bullish here on the New Zealand CAD. But if price wants to run now back to insufficiency, it wants to go ahead and run to internal liquidity. This would be another turtle soup setup. Price will run, taking internal lows and this insufficiency. Now we've ran more sell stops. This is internal liquidity. This is where resting sell stops are at. Then price will run back to the external. This is ICT concepts. So because we took a buy this morning and we're targeting buy side, and if price wants to run to the internal, if we get another turtle soup setup, this would be an internal turtle soup setup. If we do get that setup, we add more positions as we run back to the internal liquidity, and then we target back to the external. And yeah, we add more positions, but because we add more positions, we're going to be looking to take more profit at that external. And that's how we use the dollar cost averaging strategy, by identifying the external model and trading the external model, because I'm trading where price is hunting liquidity, right? Not the internal, the external. I'm not looking for price hunting stops. I'm looking for price hunting the external liquidity range. Okay. So that's the New Zealand CAD. That's the New Zealand CAD. And I'm going to show you exactly. I did the same thing on the Aussie CAD. Same setup here. And I'm going to show you exactly the same thing. Took a buy this morning on the Aussie CAD. And same thing here. Let's take a look at the weekly. Here we have buy side of the curve. This was sell side of the curve. Price ran. We swept sell side. Sell side has been taken. We have taken sell side liquidity. Now let's see. What do we see here on the weekly? We see displacement. This has created market structure shift. We see a change of character. Now let's wait for more confluence. That displacement created insufficiency. Price runs, rebalance that insufficiency. Also equilibrium. Come back to discount. What did price do? We didn't displace out of it right away. We came up, probably rebalancing this. We waited. Then price displaced again, create more insufficiency. Price rejected again. So bullish PE arrays are being respected. When bullish PE arrays are being respected, that gives us conviction that we're running bullish in this market. This has now I have conviction in this model that we're on the buy side of the curve. So because we're on the weekly and we're looking now, okay, this could be the external. We could be moving all the way up here. Now, this is the weekly, so there could be a lot of manipulation to internal liquidity in this area. So now if we zoom into the internal model, let's go to the daily and let's see what we find out in the daily. Okay. So first thing is we had this candle wick on the weekly. When we have this type of insufficiency, this is just so insufficiency, right? This candle wick, there is resting liquidity in this area, sell stops. So sometimes I like to see price come back and rebalance constant encroachment, which is 50% of this candle wick. And depending on how these levels are rejected, if price comes back here and rejects off that area, then that's pretty bullish sentiment again. That's just a run of sell stops. So keep that in mind. When we see these candle wicks in the market, especially on a higher time frame like that, that's just a key area that price will run back to rebalance some insufficiency and take out some areas of stops, right? Sell stops in this scenario. So going back to the daily here, let's take a look. Price came back, wanted to retap into that area. We also have order blocks. Keep in mind, order blocks are key areas where resting stops are at, right? Price came back into these order blocks, okay? Rejected there, displaced. We create insufficiency now. So now we took a buy on the daily. I've figured my internal model here, buy side of the curve, targeting buy side liquidity range here. And the only thing, though, I would like to see, there is an indication, though we did take a buy because price was pretty setting up, not to my favor this morning, as obviously I like to look for the perfect setup, and that's why we dollar cost average. Now, if we're trading a different strategy where we're targeting, with a risk reward ratio and having some sort of stops, that would be different. I'll be a little bit more patient, waiting for my setup, and then buying at the optimal trade entry, right? So we did take a buy here, and if we run to the internal liquidity again, if we have another internal liquidity grab before price wants to move to the external, we dollar cost average. We add more positions, and then price shows us another internal model. Sell side of the curve, buy side of the curve. And we can target back to the internal model. So exact same thing. Okay. And this is how I trade Forex. This is how I trade Forex here with Traders Network Club in my VIP sessions. We look for the external liquidity draw, and we target that. And we add positions if we do get a manipulation or if we do get some sort of internal grab, right? But we have to identify the model, and we have to understand the concepts that are in this model. And there needs to be context to it. A lot of times when traders start learning ICT concepts, they understand the concepts, but they're not using context to the concept. And that sometimes can be misleading. What are your thoughts on the Fed rate cuts coming up? I'm not really a fundamental trader. It doesn't affect my trading that I do. So to me, it doesn't matter. What I am looking for is as a future trader. So let's go to futures here. Let's go to NQ. Now, usually in the morning session before the Fed rates come out, it's very manipulated, very choppy, a lot of internal grabs, right? There's not much of a draw. So let's take a look at what the morning, I don't even look at the morning. And the first thing, looking at this morning, okay, so price did come to my opening gap, and there it came back to sweeping sell side. So that would have been a trade. This is how I trade the morning sessions, right? Is once price opens, it creates an opening gap. And this is a key area, guys. This is actually a very valid lesson here. So this opening gap in the morning is always going to be a valid key range. It plays as support and resistance. Let's put it that way to simplify it. This would have been a key area to sell right here. Opening gap, price comes, rebalance that area. Where's sell side? Here. Price came back, tapped into sell side. So that's kind of what I was looking for if I was trading the morning session. And if you came here and you zoomed into the 1 minute, now I trade very fractal here on the futures. Okay, it's different than, like I said, that I trade Forex. I'm not looking at the higher time frame. I do look at the higher time frame to just have a bias of the external, but I'm very fractal when it comes to trading here. Come down to the 1 minute and looking for some trade entries. So when we look here at the 1 minute, we don't really see much displacement out of this area. I would like to see a little bit more displacement. You can't see how price is kind of choppy, right? And this is pretty much going to be the morning. I'm expecting the morning to be like this. So what happens during Fed rates, right? When we have FOMC at 2 o'clock. What I'm going to be looking for is if we do get some sort of expansion move. If we do get some sort of expansion move, we're going to create some more insufficiency. Let's say we do get this expansion move, okay? Price creates insufficiency. It starts at 2 o'clock. So from 2 o'clock to 2:30, that's usually what I'm looking for, where price will move to the opposite direction. So let's say from 2 o'clock to 2:30, price will run the opposite way. Let's say if it's running, I like to have context to it, right? I want context to what's happening during the Fed rate. If price is running to some sort of internal liquidity, from 2 to 2:30, price will run there, and then price after 2:30, price will run the opposite way. Now, this doesn't happen every single time, okay? But most of the times I see this happen. And this is the type of setup I'm looking for. Now, this might not be the expansion move to the downside. Maybe it's vice versa. But this is exactly the type of setup I'm looking for. Now, if I didn't get the morning session, which I am more of a AM trader in futures, I like to trade the opening gap, which this would have been my trade setup here. It wasn't a clean setup because we didn't really have much displacement out of this area. But what I like to do is I like to maybe get in one contract here and I'll kind of scale towards sell side, just so I'm risking less initially, and then I'll scale my positions. Okay. So I'll get in one contract here, and if price kind of continues to displace below order blocks, I'll use those retests of those order blocks to add more positions. Okay. That becomes very complex. That comes to trading these AM sessions a lot of practice, right? But I'm just going to be looking for internal liquidity. I'd like to see some sort of expansion move coming into the Fed rates, some sort of expansion move where price creates, this insufficiency. And then I'd like to see price kind of run to insufficiency. And then after 2:30, I want to see it kind of run the opposite way. And that's going to be where I'm looking for my entry. One minute only real. In the event of interest rate cut, gold typically tends to rise. I don't trade gold, so I can't really give you guys much on gold. I only trade gold. I just trade Forex and I trade NASDAQ futures. And that's really my golden body here is futures when I'm trading internal, okay? Trading internal liquidity. Because I'm an ICT trader, and when it comes to trading gold, a lot of these different assets doesn't really typically work well with my technical trading, such as ICT. Smart money concepts, yeah, that's a serial killer. Yeah, that's basically how I trade. I use smart money concepts, guys. That's to me, understanding price action. The best way of understanding price action is understanding smart money concepts. Okay, so pretty much this is what I'm looking for here on NQ. What else we could form is I also like to look for the silver bullet setups too. So basically is when price does expand, we're not going to see a silver bullet here in this morning. Like I said, it should be kind of choppy this morning. So we're probably going to see kind of price running back to these internal highs and kind of just chopping up in this range until we see the PM session. But what I also like to look for here in the AM session is if I don't get a entry for the opening gap, I'm looking for the turtle soup. I'm looking for the expansion, and I'm looking for higher time frame insufficiency. And that 10 to 11 o'clock window will be that range where price will come back to that insufficiency, and then you can trade the initial buy side, sell side. There's your another entry. There's so many setups that are available. So there's another setup that you can trade every single morning if it sets up there that's so profitable. It's the silver bullet. It's waiting for price to create, well, first price run expansion, this expansion move, creating that higher time frame insufficiency. And all you got to do is wait for price to run here and use those concepts, those smart money concepts, to find your entry here and trade back to this initial sell side. And it's vice versa. Same thing if price runs up higher. Insufficiency, the initial buy side. FX Big Dog, what is your US dollar CAD model? Does it change decisions today? No. My models will never change. Models will never change. The models will always stay the same. They never change based on fundamental news. Okay. News will drive the market, but the model will always stay the same. So going to the US dollar CAD, and I've been pretty bullish on the US dollar CAD. Okay. And the reason is why we had this expansion move. Price created change of structure here. Okay. This to me was a market structure shift. Now, I'd like to see this external buy side get swept. So because this external buy side hasn't been swept, it gives me a little bit less confluence that we're running lower, right? I'd like to see this been swept. Now, we did sweep these internal highs. So what happened here is we were accumulating this range. Price manipulated, sweeping those internal highs, and here was our distribution phase. So now after we've got this distribution phase, I'm expecting this to be a change of character. We still have more rest in liquidity. Still more rest in liquidity here. The price hasn't swept. This is a low resistance liquidity run. So what can we now anticipate if we have this expansion move? We can see price what? Move back to internal liquidity. Meaning price will what? Run to insufficiency or equilibrium. Now, in this case, I'm still pretty bearish. There is a possibility we run to equilibrium, but what is price doing right now? We're kind of rejecting here. Why is price rejecting here? Because if we take a look at this weekly, what do we see here? We saw price respecting something here, right? Something acted as support here. What was it? It was this weekly order block. This weekly order block was playing as support. Price displaced through that area. Now it's coming back to what? Retest that key area. So this could now play as resistance. And we're in this weekly insufficiency. Now we're not in premium. Premium would be above 50%. This is where smart money traders get a premium price at selling in the market, right? So there is a scenario where price will want to run up higher because we haven't rebalanced and price might want to move back to premium before running lower. So I have to keep that in mind. But at the same thing, we are respecting this area again. That was that weekly order block. Now that's playing as resistance. So yeah, I'm pretty bearish. And let's say Fed rates decisions come out and we see the market run up. Run up to the upside here. Just because the news drives the market up doesn't mean I'm bullish. Right? That's why I don't care too much what the news does to the market. I just have to consider that when I'm trading and I have live positions that the market can manipulate, right? But this doesn't indicate anything. We can see price run up to premium and then we come in the next day and we run back lower because the model's still setting up. The model will stay the same. News just drives to these key areas of the model. That's all it is. It's just liquidity. Price moves with liquidity. So you are bearish on the US dollar CAD overall with a possible bullish move to the rebounds. Yeah, there is a scenario that price will rebalance, but overall on the external model, yes, I am bullish. Bitcoin analysis. All right, I don't trade cryptos, but we could take a look at Bitcoin. I don't know if I'm rambling too long. I don't know how long I have, but we'll go until someone stops. Let's take a look at Bitcoin. Now, Bitcoin, I don't really trade Bitcoin because once again, it doesn't align with my technical trading, right? It doesn't align with my concepts, smart money concepts. You can use it, but it doesn't work in as much in my favor. Okay. Now let's take a look here, and I'm going to look at the higher time frame here. As we've had this expansion move right here, I'm going to take a look at this expansion move right here. See this expansion move right here? See this run up to buy side? Prices now come back and rebalances. Okay. And you can also use smart money reversal. So if I take a look here and I open up, same thing how I trade NASDAQ and Q, right? I use ES as a correlation to as both assets for divergence. So you can do the same thing here with Ethereum.
Hey, Cameron.
Hey, how you doing, Chandler? Was I rambling too long?
No. You did great. It was great having you on. But it is time for our next guest to come in, and
Okay.
we want to thank you for joining the show. It's not often we get a brand new face on, so this was exciting.
Thanks I appreciate it, man. Thanks for having me on here.
All right. Yeah, and guys, I've been putting where you can find more of Cameron and what he talks about. He's at the Traders Network Club on YouTube, so go find him. And I'm sure, who knows, we'll see more Cameron in the future. So, Cameron, thanks for joining us, and we're going to move along, and we're going to play a quick break, and then when we come back, we're being joined by Tom from Simply Forex. So that's a nice surprise. So, Cameron, thanks for joining us.
All right, thank you guys. Take care.
All right.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello guys, Trader Tom here from Simply Forex. Hope you're all well. I'm with you for the next 30 minutes or so, so please feel free to ask as many questions as you like about trading. It doesn't just have to be a currency pair that you're looking at. It could be money risk management, strategy, psychology, anything you like. I'm also pretty good with films, geography, and football. Right, guys. So, yeah, don't be shy. Ask a few of your questions. I'm going to start by showing you a few things that I'm looking at. And I'm actually in a couple of trades as we speak. So, Aussie dollar yen buys is one such trade we are in. Now, I haven't touched yen pairs, it seems like, for months, right? They've been, you know, super volatile and difficult to trade. We've had lots of intervention from the BOJ. And obviously, they're a flight to safety currency, and you know, the indices have been up and down as well. So that probably explains why I haven't traded yen for a while. But I had a setup earlier on, so I just want to explain that to you guys. All right. So Aussie dollar Japanese yen. If we look at the day chart, okay. What are we seeing? So on the day chart, guys, right, we had come down to this level, and we've just seen some, you know, sideways action. Price, you know, doesn't know really what to do with itself. We'll look at the reason why. And basically, we've had a break of structure, right? So this candle from yesterday was a bullish candle breaking these highs. And all I want to do is take price up to this blue line, right? If not further, okay? So the day chart is a fresh structure break, right? It's gone from a downtrend to an uptrend. We like this, okay? We like this more than we like Gal Gadot. And then if we look at the monthly, guys, right? Just look at that monthly chart, okay? I don't normally go this high in terms of charts. I normally sort of do the weekly downwards. But if you was a swing trader, right, and you were looking at Aussie dollar yen, you would buy the living daylights out of this candle, right? You would be looking to take price, you know, back up to here or part way up there, right? So monthly supports the idea, weekly less so, but we are, you know, this entire wick represents support to me, okay? Because buyers are sitting in here. Exactly where, we don't know, right? But there are buyers in here. And on the back of that, you can see, obviously, this weekly candle hasn't finished forming, but it's pretty bullish so far. And we've had the daily structure break. Okay, we broke this level. So there's lots of reasons to like Aussie dollar, Japanese yen. Okay, and I'm a technical trader, guys. I'm looking at trend, structure, support and resistance, candlesticks, and this concept of value, right? And that's it. Keep it simple. Don't overcomplicate things. And then if we drop down to the H4, which is generally my entry time frame, okay, as soon as we got a break of this level here, which was that last daily high, we're looking at a H4 uptrend. And as soon as price came down to this gray zone, I started entering and I built into the trade, right? I started by entering 50% of my usual trade size here. And then when price came down to the next level of interest, we entered another 50% of our trade size, right? So we're just building the trade. So why did I build the trade, right? Because, and this is important, guys, right? The two things you must know before you enter a trade, right, is, this may sound obvious, but is your stop loss and your target, right? So I'm going to put a line in here, and that was my stop loss, because this for me was the last swing low on the H4, right? Now, when I started entering in here, okay, why did I only enter 50%? Because when I start buying here, my risk to reward doesn't make sense. This is my target. I always like a psychological target, 96.50 or 9700. So 50s or 00s. And this 50 happens to be a good area of resistance as well. So at this point, that is my risk, and this is my reward. Okay, this has turned into a bit of a tutorial. You can ask questions. I will answer them as well, right? But my risk to reward doesn't make sense if I'm buying here, okay? But when price came down to the next level that I like, okay, I can buy again. And that's what I did. And that was another 50% of my usual trade size. Okay, so these were both 50%. Now my average buy value is somewhere in the middle, right? It's in between those two levels. Okay, so now all of a sudden, because I built the trade, this is now my reward and this is now my risk. Okay, and the trade becomes more attractive from a risk to reward point of view, and it allows me to enter at levels that I like, right? It might not react at that level. It might react at that level. And that's how I trade, guys. I just build trades based on price action. It's as simple as that. And another thing I'll do, guys, is this. Once price gets to here, you know, I'll close, let's say, 80% of the position, right? And then I'll let 20% run, okay? And then I'll just keep trailing my stop. And also worth pointing out, guys, as you build that trade, right, my stop loss was below the last swing low, right? Now, this is clearly the new higher low. Yeah, clearly you can see that, right? We're in a H4 uptrend, and this is the new higher low. So all I'm going to do with my stop loss is move this up to here, right? I still give it a bit of room below this last low. But I have now reduced my risk by this amount, okay, which on Aussie dollar yen right now is probably quite a large amount, okay? So I've reduced my risk by almost 50 pips. So if you think about that for a second as well, I can continue to build and add to this trade because now I can now put more money onto this trade. I've reduced my risk heavily. Let's say if price comes down here, yeah, I can start buying and adding to this trade again. And I will just keep doing this with structure and trend and build the trade, guys, right? And it's just using simple price action premise, okay, the things I explained earlier. So yeah, that is Aussie dollar yen. That's the trade I'm in. It hasn't quite hit target yet, but we shall see. I might take some profit off this trade before, you know, the Fed interest rate comes out later, because, you know, the Fed interest rate affects every currency pair pretty much, right? If you're trading, you know, if the New Zealand dollar interest rate is coming out, it really only affects New Zealand dollar pairs, maybe a bit of Aussie dollar, but the Fed makes everything go buck wild, right? And that's a technical term, buck wild. All right, guys. So yeah, just wanted to share a trade that I'm in. I'm also in New Zealand dollar, US dollar. And let me just remove all this before it looks like the scribblings of a madman. New Zealand dollar, US dollar, right? I'm still in, I've been in this since the break of this level, right? So I've been in it since here. And again, once I started buying here, right, my stop loss was here. But now we're seeing a higher low. My stop loss is now down now here, right? And I've taken a bit of profit off this trade. Once I saw these H1 candles, if we go down to the H1, once I saw these H1 candles, I've taken some profit off this trade, 50% to be exact, because with the news, you're just gambling, right? So this becomes a bit of a risk-free trade. I've secured 50% profit, right, at this level, and then we will see what the news does, right? If it shoots up, great. If it comes back down, my stop loss will be below here, and I will come out with a small profit, okay? But again, simple price action, okay? You can see the daily chart has been coming up nicely, right? So we'll see what the Fed does to that trade, guys. Right, let's take a few questions. Okay, so we've got a few people wanting to look at gold. You are gold. Sorry, I always sing that when we look at gold. And guys, can I just say, if you're enjoying my analysis, please don't forget to come join my channel, Simply Forex, and subscribe. Yeah, we'd love to have you. I give you my trade ideas every day. Gold. So some of you might be familiar with me or not, right? But what I do is a top-down approach using price action. Now, the thing with gold is, right, everyone on the planet can see this as a buy, right? You know, even if you've been, you know, literally if I was born yesterday, right, and I opened my eyes and I knew nothing about trading, it's, you know, it's an uptrend, it's a buy, right? Okay, clearly this is the weekly chart, right? This is where we're at. Okay, we're in an uptrend. Not only that, look how bullish the weekly candle is, right? So everything's telling us to buy. I'll stay on the weekly chart for a bit, because the problem with a gold buy is that there's no value for me at the moment, right? There's just no value. So if I start buying here, right, where would you put your stop loss? Below here, right? So there's no value in buying here for me, right? I would like to see a retrace, you know, potentially back into here. Then I can start buying, right? Now, if I start buying here, put my stop loss here, you know, I'm not a swing trader. I don't trade the weekly, but, you know, if this was H4 or whatever, I want value, right? So when price decreases, retraces into here, that's where I'm going to buy, okay? Because this represents, this is value, right? Value, I'm going to spell it out. It's so important. If you're going to buy anything, right? If you're going to buy a house, yeah, you don't want to pay top money for it. Yeah, you want to get a 30% discount or whatever. It's the same with trading. Trade from value areas. So yeah, that's what I want to see. The other thing with gold is we are at all-time highs. So you don't have a reference point in terms of a target, right? There's no historic data to work with, right? So you don't have a reference point to put a target in, right? So all you can really do, I would say, is, like I said before, you're just going to choose psychological levels. And psychological levels for me are 50s and 00s, right? Now, you can see my target here, 26,000, 2600, right? That's going to be my target, yeah? Because I don't have any reference point. Now, imagine this. Let's go to the day chart, right? Now, let's imagine this, guys, right? Price comes down, again, because there's no value up here, right? But if price retraces down to here, moving average 20 catches up, you can see this is a really nice level. It might not retrace to here, right? I won't have a trade until I get value, right? But then once it retraces to here, you also have a target. This last high becomes your target, right? So you can take price up to here, leave some profit on the trade to perhaps take higher, right? So always trade the retrace. It's so much easier than trading a breakout, for example, right? And a retrace, you know, a breakout, you can find yourself in drawdown very quickly. Whereas a retrace, the opposite is true, right? You find yourself, if you've retraced to a nice level, you usually find yourself in profit quite quickly. All right, so I want to buy gold, but now there is no value. Okay, so yeah, hope that helps, guys. Any other questions, guys? Any other pairs that you would like me to look at? Boomba, I like your name. Boomba makes me want to dance for some reason. New Zealand dollar, Japanese yen. Okay, let's take a look, right? So New Zealand dollar. Someone's just asking what's the name of my channel. Guys, the name of my channel is up here. You can see it here, right? Simply Forex. And you will see my ugly mug on the page. New Zealand yen. So yen pairs again, right? I want to buy yen pairs. Not all of them, but some of them, okay? And it, again, if we go back to this monthly chart, right? If you said, again, if you showed anyone this chart, right? We are in an uptrend and we've had a humongously bullish candle, right? So even if you were new to trading, you would be like uptrend, bullish candle at the moving average 20, which is dynamic support, right? In this case, you would want to buy that, right? Now, that's the monthly. The weekly is not painting such a rosy picture, right? Because this is in a downtrend, right? There's no two ways around it, okay? We're getting lower highs. But, you know, again, there's this huge wick. There are buyers in here, okay? We don't know if these buyers are going to come in right here, which it looks like some have, or they're going to come in down here. All we can do is let the chart tell us, right, where these buyers come in. So the weekly is probably the only time frame that doesn't support this idea, although there is support from here to here. But if you look at the day chart, right, you know, and you know, this is very subjective. Aussie dollar yen is clearer to me. Okay, so let's just quickly compare New Zealand yen with Aussie dollar yen, right? If you go to Aussie dollar yen and we look at the day chart, that is a clear structure break for me. Bang, right? Uptrend. We're getting higher highs. If you look at New Zealand yen, right, you know, I would say it's this entire area. Yeah, it's less clear that we've had a break. You know, what I'm trying to do here, guys, is, you know, pinpoint this area and this high here. So New Zealand yen is less clear than Aussie dollar yen. So the trade for me would be Aussie dollar yen, hence I'm in it. Okay. Now, I still like to buy New Zealand yen, right? We're seeing, but what I'd like to see is a break of this level, right? This level right here. So when it breaks this, yeah, if we get a bullish candle breakthrough here, that for me kind of confirms that we've changed trend, right? Okay, and I'll be looking to buy this. And then generally speaking, how I roll, guys, is I let the higher time frames give me my direction. So usually weekly and daily, right? I know we looked at the monthly time frame, but usually weekly and daily. They just tell me, Tom, you can buy Aussie dollar yen, or Tom, you can buy New Zealand yen, right? And then I'm looking at the H4 for entries, right? And all I'm looking for is an uptrend. Simple as that, right? And if you just follow H4 structure, okay, we are in an uptrend, okay, right? So all I'd want to see is a breakout of this gray zone for this trend to continue. Right? Remember this daily zone that we break. You can see it's an important level. We get a retrace into here. And then all I want to do, guys, is hide my stop loss below the last swing low, right? It's really not, I'm not, it's not rocket science. Yeah. What I'm just simple price action. My stop loss would be where this alarm is. And my target would be the next area of potential resistance, which is here. And that is it, right? It's just knowing price action, knowing how to read the charts, and being with trend. Okay, and that's exactly what I'd be looking for New Zealand yen. Right now, I don't want to touch this because it hasn't broken this level. You can see, even if I scroll out a bit, yeah, you can see this level, support, resistance, 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 right? But if we get a break, retest, I'll be all over this, right? If I'm not in another yen pair, right? I don't trade. Sometimes I do trade correlated pairs, but you must be careful. If you're buying New Zealand yen and Aussie dollar yen, they are pretty much the same trade, right? So trade the one that gives you the best setup. Hence, I'm trading Aussie dollar yen. Anton, Sapron, pound yen is a safe haven. Yes, it is, right? So on that point, right, I think we should look at the NASDAQ, because the NASDAQ for me is at a very interesting level. Okay, so I'm seeing a descending triangle, a chart pattern. Any chart pattern can be explained with price action, but this is a descending triangle. So you know what normally, potentially this is what happens, right? Until price gets squeezed, and then it has to go somewhere, that way or that way, right? So for me, and this will have an impact on yen pairs, right? It's at a really interesting level, and it could go either way, right? So this is, we're in a downtrend as well. There's no two ways about it. We're in a downtrend, right? Lower highs, that high hasn't broke. Lower lows, okay? We're in a downtrend, and we are at this, at this trend line. Now, all I'm looking for, it'll be on the H4, guys. So let's take a look at the H4. You can see the H4 is in this box of indecision, right? Price, you've got buyers, sellers, buyers, right? And that sort of price action, you do not want to touch with a barge pole, right? You do not want to go near that, okay? But what you do want to do is, once there is a break of that box of indecision, you want to get involved, right? Because, so what's going on inside that box? Basically you've got buyers and sellers. Okay? They are just fighting with each other, Okay, so you've got buyers and sellers just fighting. And then I'm not going to get involved until there is a winner. And if buyers win, we break to the upside. Okay, and therefore we break out of this resistance level, we break out of this channel. Right? If that happens, buy it. Right? Again, not complicated. When we're in this box of indecision, if it then this resistance level holds and this trend line, and we get a break to the downside, sell it and look to take price lower. So this Fed interest rate decision today could really be the catalyst for, you know, the NASDAQ choosing a direction. Excuse me, guys. I do a hell of a lot of talking. Let me sip some of my vodka. That's better. So yeah, that's what I'll be waiting for. And like I say, the Fed could really move this one way or the other. Because if you go back to the day chart and you think about that, if you got a bullish candle like this, right, you have then broken this last high and you've broken out of the trend line, right? That would suggest buying, right? And if the alternative was true and you got a nice big bearish, you know, red candle off the back of this Fed, then we are still with the downtrend and we have a nice bearish candle which reacted at resistance and a trend line. We would sell it, right? So yeah, let the market tell you what to do. Don't trade this price action. Yeah, you know, let the market tell you what it wants to do. Right, what else are we looking at? A rate cut usually pushes gold US dollar higher as lower rates make gold more attractive. Taffin, I hear what you're saying, but we can't predict the future. Just let the news come out, watch the market react, and make a decision on the back of that. Right? Don't think if this happens, then that happens, then this happens. Or, the information you need is in the chart, right? So just wait for it to happen. Oil. Somebody wants to look at oil, which is basically the black gold, right? And I'm based in Dubai, guys. There is, I'm in the right area for gold, black gold. Okay, so let's look at West Texan. Right now, so I know we're at a very important weekly support level. So let's take a look at that weekly support level, right? Now, the thing here is, right, we're in between a rock and a hard place. Yeah, so this is a key support level, right? And it's no surprise that at a key support level, we got a nice bullish candle, okay? And it's expected, right? There's loads of buyers in here. Yeah. And that's another thing, guys. Don't think of support and resistance as support and resistance levels. Support is a buying level. Resistance is a selling level. Right? May sound obvious, but just change that mindset. It's not support and resistance, it's buying and selling. Right? So yes, I think there's room up to this level, okay? But we're in a downtrend and I want to be with trend. So do I really want to try and sell back into this support level when the market has shown me it wants to reject this level? Right? So that's what I mean by a rock and a hard place, guys. If you look at the day chart, okay, it's the same scenario, right? We are in this downtrend, okay, and we're almost, perhaps this has a little bit more room to the upside, right? But as soon as it gets to this 72 level, I am not interested in buying that any further. I'm not really interested in buying it now because we are against daily trend, right? But I think there's a little bit more room up to this 72 level. Then you can expect a bearish reaction to potentially take price lower. And that's what I would be more interested in, because I want to be with trend. But the other thing is, look at all these buyers, doji, buyers. Yeah, ever since we've hit that weekly level, just buying galore. So do you want to start selling all that buying pressure? Not really. Yeah. So oil seems to me like it's going to be a bit of a stay out for a while. So the question is, what do I want to see for me to start buying this? And what I want to see is this. Price gets to this level, creates, excuse me, it creates a daily uptrend, right? We break this high, we're getting higher lows, higher highs. Then I will be all over buying oil, because you've got that weekly resistance that we've bounced off. We've got a daily uptrend, and I will just want to just buy the hell out of it. All right, so that is oil. I hope that helps. Who asked that question? I cannot see their name now. Right, guys, I'm just going to carry on until somebody stops me. I'm not sure how much longer I've got. Aiton is saying the 70 US dollar mark. Okay, so if you look at the H4, right? So, you know, will we get to this level of resistance? The H4 is telling us yes, right? The H4 is saying, right, we are in an uptrend. And, you know, I like to be above the moving average 20 as well, right? So that would suggest, yes, we're going to make it back up to here, right? If we got a break of this level, then the market, again, just let the market tell you, right? Don't predict things. Just let the market tell you. If it's in an uptrend, chances are it will come up to here. If that uptrend turns into a downtrend, chances are it will come back into this level somewhere. Okay, but looking at oil right now on the H4, we've had a nice bullish candle. You know, potentially there's some room up to here. Right, we've got a few people wanting to look at euro US dollar. The FOOFs. I'm assuming you are.
Hey Tom, it's it's me. It's Chandler.
Howdy.
It's awesome having you back on the show. That was exciting to see that you were coming on today. So we were. Really
thanks for having me, Chandler. Yeah, good to be on again, mate. Haven't seen you all for a while.
Yeah. And guys, I've been putting Tom's channel in the chat. I'll do it one more time. There it is. I've done all the work for you. All you gotta do is click that, and then you're there. Then you just gotta hit one button. So there you go. So Tom, thanks for coming on the show. And I hope we see you again soon. And guys, we're gonna take a quick break, and then we've got Ivan, the Yin Man, coming on next, and so we'll see what he has to say. Tom, once again, thanks for coming, and we'll see.
Cheers, Chandler. Thanks, guys. See you next time.
All right.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
And today it is the FOMC meeting in a couple of, some few hours, where we're going to have the monetary policy statement. We're going to have the rate decision. We are going to have the economic interest rate projection for the first year, second year, third year, current, and for the longer run. Those are going to be the most important going forward. And I heard Cameron say he wasn't about fundamentals, but here I am. my name is, I've been trading for 10 years. I do try to help you guys, being a mentor and try to make you guys do things a bit better than you did yesterday. So where are we? Yesterday I was a clown. Today I'm going to be a bit more serious. But if you take me out of my current skin, you might get some jokes out of me. Other than that, I I really need to be serious today because it is a serious day, right? We have a shirt on and everything is good to go. Good morning for those who are mornings, and good evening and good night for those who are about to go to sleep. Australia. CPI out of UK came today. I don't know if anyone's mentioned that yet, but that's quite important. And core came out of Europe at 2.8 again. And CPI came out of UK at 2.2 again, which is the same thing as last time. But the core went up to 3.6. That's a bit from 3.3, by the way, which is a bit of a worry. But still, we're still going to look at 2.2 and be like, okay, that's actually quite okay. It's not too bad. It's actually going to create either Bank of England holding or, driving it lower. So this kind of messes it up a bit, I would argue. So that is one side of it. And then I just saw, I think it was on Financial Juice, I saw that the oil inventories was negative 1.63 million. Instead of what was expected was about 0. So what does this mean? It means that there is 1.63 million barrels of crude oil less. And what does that happen to price? Well, price is one thing and one thing only. It drives a bit higher. The other thing that I saw in the Norwegian news today, I don't know if it's anywhere over Forex, but about an hour ago, apparently there was an attack back from Hezbollah against Israel that should have sent the oil a bit higher, but I haven't seen it on the explosion was heard during the funeral of the son of there might also be a bit more of that Hezbollah thing going on today. So that could be a thing of and again today numerous communication devices explode in southern suburbs of Beirut. So that is very endangering to one, human lives, and second of all, oil price. Just having that in your head if that kind of blows up. So that has made oil, or that has not made oil, but that's the problem right now with oil and the market. For that matter, we have falling inflation. That was the deal. CPI is falling, but supply has also reduced. And what happens to price? Price at least stopped falling, if that makes any sense, right? Cool, good. Boom. Where do I think this is going to go? I honestly do not want to give it like a direction or so, but I want you to think of maybe higher. And there is that. I saw a lot of requests for dollar pairs, and I have to be truthful with you. I would argue we are currently at resistance at most of them. We saw a bit of a reaction of the euro, and somebody said earlier that euro broke support. I'm like, dude, are you too stuck into technical analysis? I'm sorry, but we don't do that here. What does that mean? It means that whatever happens now until the FOMC meeting, you're gonna have what? You're gonna have. Let me see. You're gonna see nothing. You're gonna hear nothing. You're gonna wait for the testament. All right. You're not gonna do anything. And if you think euro did this or dollar did that, or if you think this is a range, if you think this is a reverse, or if you think this is a bearish, it doesn't matter. Okay? Jesus. Get your head out of your gutter. Maybe the sun as well. Because what does it mean? Because as you see here, S&P 500 is more than likely going to make a new higher high today. Okay? S&P 500 is most likely going to higher high today. Australian dollar, in my mind, is more than likely, if we do only 25 basis points, which is my argument, we're going to see 66.70. Then whatever happened today doesn't matter. It becomes peanuts in comparison to the reaction of the statement that we're going to have, potentially. Now, number one, as I said previously at the beginning, it comes down to the projections of the future interest rates in combination with what they're going to do today. So if we get the freshest one, it's 50-50. That is not great if you are thinking either direction. There is going to be a lot of movement on dollar. Woohoo! We like movements to either direction. Now, that's going to make and break your trading account. I saw someone earlier in chat said today that they hit their stop loss on gold or something. And if you are so brave that you're trading gold at these levels, I'm not gonna tell anything bad about you as a trader. It might be a very good trading system that you have. And I'm probably going to piss everyone off now, but I'm going to tell you for free, all right, since everyone is doing it for free here, is if you buy now, you deserve it, okay? Because I would never, ever in history of this earth ever tell you now is a good price. Now is the best price you can ever get. Now is your competitive advantage. Now should you buy gold. The move has already happened, bruv. And the market gave us 24.70. That's your buy price. I didn't know at the time. It is a bit backwards. And then you can say, oh, Ivan, you should have bought them down there if you're telling us now. No, I was not looking for that. I was looking for much deeper pullback. I wanted pullbacks like 23 or 22 or whatever, 24 probably. I wanted that. So I was never part of that move. Meaning, where is your competitive advantage? Where are you going to make money in this market? Where are you going to do it? And if your answer is going to be the highest high that gold has ever done, and it has moved about 2 or 3% in a good day, you don't think it's going to be a 1% pullback? And then Fed current rate leads to unwind of the dollar-yen carry trade, and yen pairs or safe haven currency could also strengthen. Given the CAD weakness, what is your opinion on CAD yen shorts? I think that is the wrong currency to short. Canada produced 2% inflation. Okay, yen pairs, Canadians, it's still going to go lower more than anything else, but CAD is not the weakest one in the class. Sorry. Yeah, maybe. Wait. Actually, good. Okay, sorry. I was thinking the opposite. I don't know why I was thinking buying CAD yen. Sorry. Good choice. Sorry, mate. I just don't know right now because we made a bullish reversal on it. So it's a bit. We'll see. That's why I've also said I'll wait until the FOMC until then I'll make my decision on what I will do with it. But yeah, cool. Is the volatility going to be minimal seeing the rate decisions coming out of 7? Absolutely not Forex trading. And thus, given the reason is that the market currently has priced themselves into a corner of 50-50. One is 1 rate cut, one is 2 rate cuts. So most likely going to be 2 rate cuts. And that's what the market has priced in at the moment. We normally have, the normalcy is a 99% chance of whatever that is. Today is a new situation. Okay? So, I have a one NAC3. I don't know how to say in username, but what's your opinion on CAD shorts? I believe that that's probably a good idea. I want to wait past FOMC, see if you get a lower low first. Almung Mazor, you are so late that even Jesus came before you. As I said earlier, oil probably going to go higher. but don't take my word for it. But that's all. Cool. Aussie dollar. I believe that if we get a 25, I don't think JP has the guts to do it. We're gonna go down to 66.80. What does that mean? It means that whatever we start off at pricing in from Thursday, give or take, is going to be priced out. Euro, same thing, down to probably 110.50 realistically, but hopefully 1.1. Dollar yen is showing signs of reversal, right? It is showing signs of reversal. Together with the yen pairs, we're still very bearish. All right. So the question is that you're going to have today is it going to fall further? And the answer to that is I really wanted to fall a bit further. Will dollar yen rise if gold making a pullback? Good question. I can give you the answer. Is there a correlation between gold and dollar yen? Let's say do it inverse. Lately, it's been quite the same, to be honest with you. That's a good thing. I'm just going to take away this one. So it's been quite the same lately, but not over time. So from what? Where are we? From June, we have, generally speaking, going in the same direction. But from June, we have been going the same direction. So the correlation is kind of a bit messed up. So would gold rise? Would dollar yen rise if gold falls? That theory should generally be correct. And it has been correct lately. But it might not ever be that. Make sense? So what is my theory here? I don't have a theory on dollar yen because I want to say it should go lower for further for longer because that's where the money flow is currently. If we are saying monetary policy directions, that is lower. If we're asking about, so FA is lower, sorry. If we do seasonal, that is higher as far as I remember. Then we have sentiment, SE. What is sentiment today, people? Just don't remember the sentiment. I don't remember dollar yen sentiment. There it is. Sentiment, retail positionings. Minor currency pairs. Thank you very much, sir. I've forgotten everything that I do. Okay, cool. So yen, dollar yen. Coolio, and that one is, ladies and gentlemen, 50-50. Okay, so sentiment is flat, and then technical analysis is, what is it? What is dollar yen technical analysis, people? You guys who are the experts in technical analysis, what is it? Master gamers, gold bars. Okay, I will do that soon. Yeah, you would have to rewind an hour. Wasn't realizing the show started, but I've been waiting for just that. Yeah, sorry. I know, Mazora. I'm having a laugh. Thank you very much for being here, by the way. I really love you. Don't worry. I'm gonna make it worthwhile. All right. Go dollar yen is bearish, potentially having a bullish reversal. So in general, yes, you can look for bearishness on dollar yen, but I want you to be careful about the short-term volatility. That's all. Okay. So what was it? Well, dollar yen rise if gold makes a pullback. The answer is yeah, it probably does. I have spoke about the big if, but I can give you a very good, clear rundown what I do gold. Is that if as the market currently has priced itself in a 50-50, we are going to have a lot of movements today. Because whoever is wrong needs to pull out. All right. That means for gold, if we now today see a 25 basis points cut, not 50, you guys are going to count that way. Okay. Now, for whoever is in a buy position somewhere within the last 2 days since Monday, whoever bought up here, I'm not going to tell you what you should do and should not do. That's up to you yourself. But you're going to get a very clear message from me. I really hope your strategy is profitable. I really hope your risk management is top-notch. So that if gold goes down to 25.20, if gold shows up in this area, you are ready for whatever reasons you have for entering, or down to 25 flat, or 24.50. What am I talking about? For every 50 ounce on gold, you're looking for reversal to the upside. Because my simple opinion, this is not a place to buy in my strategy. That's what I'm saying. If your strategy, since you took it, you're making Lamborghinis every time up there, I'll be waiting for the pullback, and I'm waiting for the fall. Because the fall, in my opinion, I might be wrong. Don't quote me on it. But if we do see 25, we are going to be down at 250. 25.20, sorry. Where does that come from? Comes from the Thursday we started this rise from. Where it happened on Thursday, that's when the market calculated and thought, we're actually going to do 50 instead of 25. It's a reset. And many people have actually exited gold up there. So there's less buyers at the moment versus down here. Just saying. Thank you very much for saying I'm the best guest on the show. Why 25 basis point bullish for dollar? Because they're cutting the rates. Okay, let me. Can somebody give me like a helping hand here? Can somebody give me like a theory? How can I say? Oh, yeah, true. We have it. Let me find it. What is this? This is one twist. It is a toffee chocolate. If you can only like do. No, can't do that. My face. Anyways. You have already given. It's already priced in 1. Right? But the market thinks 2 is going to happen. So what happens to your statistics when 1 is taken away? Is that, do you have less than? You're expecting 2, but you only got 1. Right? I don't know how else to say it to you. It's bullish for dollar because whoever betted on 2, which has shorted the dollar or bought gold or whatever, they're not getting the financial condition they need to continue holding that trade. It's like saying you bought gold, for example, 23. You sold at 23.60. You sold there. Market went higher. What do? You get out. Why is it so? Because you thought the market would continue lower. That's the best FX analogy I can ever give you. All right? Because where most market participants has priced in double rate cuts when they are wrong, and the market is no longer, for gold, is going to be bullish, they have to get out. It's a rug pull. in a way, if that makes sense. Does it make sense now? Or do we do another analogy? If you are expecting 2 friends to come, but only 1 friend comes, how many friends do you have? Sorry. Or how many friends did actually show up? And you made food for 2 people, for 2 friends, but only 1 got there. Right? What do? You eat food for 2 people. That's kind of what happens. Right? Cool. Thank you. So, continue. I believe gold is going to do Columbus says, I don't have friends, but for crying out loud, man, you have me. What's wrong? What's I don't have any friends either. No one wants to be friends with me. I believe gold should go down to 2,500. I don't think that's going to happen. I'm just making a very bold statement, but I'm telling you in a very bold way is that's the consequences of a 25 basis cuts, not 50. And if 50 happens and this stays, like maybe higher for that matter, but it doesn't do much, okay? If something comes in at expectation, if you expected your 2 friends to come and 2 friends showed up, are you going to be happy or going to be sad? Are you going to eat food for 1 people, 2 people, or 3 people? You're going to eat for just yourself. Okay, so you're okay. Mildly positive, I guess, because you're going to have a lot of fun. Is it going to affect silver? Yes, it does. So let me get through what I want to say. So I wanted to buy this one yesterday. I didn't. I backed out. I don't know what to call it in English, but I backed out. I want to see what FOMC does. I want to buy 23rd. That's why I'm like a bit, I don't know. I'm going to buy it soon for seasonality wise, but it's a bit early. So I want this to fall today. Finger crossed, toes, and all those things. CAD-yen, same situation. Is about to break higher. I want it to fall. Euro, I want to fall. It has broken the previous high, come back down again. So we'll take it from there. Pound yen, same situation. Reversing now. I want it to come down. Break this, whatever looks like a reversal. But this is what I talked about from over here. I said we were going to come back to that price. We did. I didn't buy it because I don't know. Afraid, scared, lonely. I don't have any friends anyways. I'd be so sad if none of my friends turn up. So it's true, Angus. That's why I would turn up. I mean, how do you emphasize the world capitalism of Forex? For example, situations here in the Middle East is probably escalating with Lebanon. Yeah, and I don't. It doesn't have much. It doesn't have that much impact anymore. It did, but I wouldn't be too scared. Of course, if Lebanon had nukes, Iran, I'll be a bit more scared. But they're never going to use it. Look at Russia, what they did. So they're never going to use it. It's just going to be a petty war at this point. Because as you saw, thankfully enough, Iran didn't retaliate Israel's attacks. Hezbollah didn't retaliate Israel's previous attacks, at least not until now. Apparently, I said going to wait for it, maybe a couple of years or so, and then strike back. So until we see they strike back, which is not in their best interest because that's going to blow up the entire Middle East. They have refrained from doing it. Thank you very much, Iran, for not doing that. I love you for that. They've taken the higher horse, sorry to call it, the big brother, and become the reasonable and not escalating it. So I'm not too worried, to be honest. What I understand now is that you're saying if number comes as expected, it is bullish, even if it's still lower number than the previous. No, that's not what I'm saying. Let me do a third one. If this number shows up here as 525, mark dollars bullish. If this shows up at as 5, that no reaction in the market. That's the best thing I can say right now. Is the rate cut good for dollar? No, it's bad for dollar. It's good for gold. So it's opposite. Sort of, yes, but I have to listen to what Powell says. Yeah, you have to. Also, mate, I'm not sitting here doing anything else than just waiting for Powell, whatever he's going to do. I think Japan's going to raise tomorrow and market sinks. That would be very funny, Mohan. I would love that. Is that a Bank of Japan tomorrow? Are you joking with me? Because that wasn't on my calendar. It's on Friday. Okay, that was a better day. Okay, maybe it's for you. Yeah. Yeah, Friday, give or take. Yeah. I wouldn't short it right now. That's all. Chandler. But yeah, Friday. Yeah, cool. Then they were good at it. And there's also interest rates from Mr. China, and there is CPI in the morning. So love it. Does waiting for previous low at 24.85 is a good okay? As anything at the moment. Also looking for fall.
Hey, Ivan, I heard my name.
Yeah.
Ivan, thanks for coming on today. We do have our next guest ready to go. So I appreciate you coming on. You've come on a couple times this week now, so I appreciate all the help, especially while the regular host of the show is gone and the editors are running the thing. So, guys, I've been putting Ivan's channel in the chat. I'll do it once more. There it is. You can just click on that and find him. Ivan is also our head coach in our VIP Discord. He does webinars in there exclusive to VIP members. There's a lot of great value in those. We get a good number of attendees and rewatches on the recording. So if you want some of that, join our Discord because Ivan's in there. He's given a lot of good information. So Ivan, thanks for coming on.
Thank you very much for having me.
All right. And guys, we're going to do a quick break, and then we've got FX Big Dog coming on next.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Alrighty, traders. Good morning, good afternoon, good evening, and welcome to this session. Well, should I say I should be welcoming myself to the session. I haven't been here for a while. Chandler, it's very good to be here. Thank you very much for bringing me on again. And so we're going to go ahead and take a look at these setups. I'm going to try and see if I can get my there we go, get my camera in the middle of the screen here. So a couple of things here as we firstly, let me go ahead and share my screen here. That'll be a good start, and we can go ahead and start off with that. So we got news coming out this afternoon, and it's going to be the Fed's making a decision on rate decision. Now, there's obviously been a couple of things going around on the internet of what the Fed's going to be doing, and whether they're going to do just a 25 basis point cut or are going to go 50, 75 basis. If we take a look at the consensus here, we can see that there's about 60% says, yep, we're going to move it down to about 50 to 75 basis point. So very little believe that it's only going to be a 25 basis point. We'll have to wait and see. If we take a look over here on the data, let's see if anything's changed up here on the calendar. Nope, looks like till 25 pence. So there might be a surprise. 50 basis point. Could the Feds go ahead and cut the rates to a 50 basis point? Very possible. I think it is. I mean, everyone's got their view on that. I think it's going to be a 50 to a 75 point cut. And that's because they're looking at the inflation numbers, they're looking at jobs, looking at all of these sort of indicators that are indicating that we're getting a softer sort of approach in the market right now with regards to the economy. And so this seems like the way to go in order to be able to slow down because even though the Feds want the interest rate, not the interest rate, sorry, the inflation to come down, what they also don't want to do is to allow it to come down too fast. And if it comes down too quickly, that creates problems as well. So there's a combination of that. There's a happy medium between what they really want. And so if they go ahead and increase interest rates, if they go ahead and cut interest rates more than what has been estimated, that could be a case of them saying, well, we want to try and slow things down. We want it to come down, but we don't want it to come down too fast. So now, traders, it comes back down to everything comes down to technicals, right? If you don't understand the bias, you don't understand the market or at least price action and what price action is going to do, then really it's just a guess. All right. Now I know we're speculating, but by speculating, you're using tools, you're using technical analysis to be able to understand what price action is going to do. Because believe it or not, whether you know it or don't know it, price action helps us to determine what the market's going to do. It helps us to be able to understand the emotions in the market, because price is driven by people. People are mostly driven by emotions. And so if you, and as an example, if you take a look at, these things that are happening across the world right now. In fact, just let's take a look at this country with regards to President Trump. With the assassin attempts. You get all of these things happening, people start getting concerned about, firstly, the safety of the country, the safety of our president, the safety of, everyone really. And so based on that, people then react emotionally about, or sometimes it can be emotionally, sometimes there is an investment approach, which means it's a sound decision based on information that you're making. But mostly it's emotions, right? And so if we look at the charts, and I'm going to go into it a little more in depth right here, because I'm not really a qualified fundamental trader. Look, I think a lot of us know the news. We understand the news. We can read it. We can understand or at least we can read between the lines. But it really comes down to, do we really understand the news? Because sometimes we're expecting price to move up based on some good news, and price moves down. And then you go, oh, well, I don't know. Well, you know what the question, the answer to that question is that price is moving based on 4 reasons, all right? The market moves based on 4 reasons. It rebalances equilibrium, rebalance insufficiency. It looks to create, all right? It's creating liquidity, and it's also hunting for liquidity. Those are the 4 reasons. Now, Cameron came on a little bit earlier on today, and you saw a lot of him talking about different types of, structures, models, buy-sell models, and looking for these different insufficiency levels that price is going to move to. And that is exactly what makes the market move to a place where you don't understand why it's moving there. So when you go ahead and look at some news, and news comes out, and the price moves, and you're expecting the price to move in the opposite direction, and you're wondering why, it's because of those 4 reasons, all right? Because prices either has not rebalanced equilibrium, it hasn't rebalanced insufficiency, and the market's moving to these levels, or it's creating liquidity, or more importantly, it's hunting for liquidity, which means stop losses, hunting for stop losses. And so if you think if you think and trade as a retail trader, then you're always going to be that trader that's going to sit back one day, and you've probably been there. How many times have you sat back, put a trade in, placed a stop loss, only for the market to go ahead and stop you out, and then taken off in the direction that you actually traded? So which means you got the bias right. But what you didn't understand is that price was still looking for liquidity. And the stop, we call it stop hunt sometimes, but it's that sweep of liquidity that price is looking to take out, which, by the way, your stop loss was placed there, and then price goes off north. So how do we avoid it? We understand better what price action is trying to do, all right? And understand where the smart money is. So let me use an example here, just as a quick example right here, right? So if we look over here, we're looking at the market doing these type of things, right? We get price does this, goes up, then we see the market moving sideways a little bit, and then you think, okay, the news is good, we're probably going to go back up north, and then what ends up happening, you put your stop down here, price does this, and then spikes down, and then starts heading north, all right? Now, this would be referred to as a turtle soup, also a manipulation move, where price goes ahead and accumulates, manipulates down south right here to hunt stops, and then goes ahead and distributes towards a larger time frame liquidity level. All right, could be a buy sell level right here. And so we also have to understand that the market is always creating, when the market's creating accumulation, your dumb money is in between. This is where the dumb money is trying to make money, right? And they're always putting these stop losses outside this level right here. The smart money is actually looking to enter the market in the opposite direction. So they're looking to sell here, and they're looking to buy in this region, right? So they want to buy here, and they want to go ahead and sell in this region. This is where the smart money. So when you see price inside consolidation, it's a manipulation move that puts price in a position where the smart money comes in and then pushes price in a direction. And so that short example here is no different to what we're seeing here on the charts. Now let's go here. I've got the daily chart open right here. So the first thing I want to go ahead and look at when I want to try and identify what price is going to do, I first want to start off, and it's always got to start off there, right? Accumulation, start off there, and then you can look for your distribution or your manipulation move, and then your distribution move. And so as I look over here on the chart, and I don't have to go as far as this area right here to look for something, right? I don't have to go as far as this area to look for something. I can go to somewhere closer and identify what's happening right here. Now, this is a daily time frame. And even though I'm looking at the daily time frame, I'm looking at this to say, hey, we've got accumulation here. Right here is accumulation. So when I'm seeing the market accumulating here, what is the next thing I'm looking for? I'm looking for manipulation, right? So when the market accumulates, there's going to be manipulation. Now, just as I mentioned earlier on, there's 4 reasons why the market would move. Rebalance equilibrium, rebalance insufficiency, create liquidity, and then hunt for liquidity. Now, if I understand those 4 rules, then that means when I'm seeing accumulation, what's going to happen next? Next is going to be manipulation. And where is it going to go to? Well, rebalance, right? It's going to either rebalance or it's going to go ahead and hunt. Now, this is what I'm going to go ahead and do. I'm going to take a look over here on the chart, and I'm going to go ahead and put in some, let's go ahead and put some details here. So let's go ahead and mark this off. So we've got accumulation sitting over here, right? Going to mark that off as accumulation. All right, starting off with accumulation. Now I've got to look on the top and the bottom side. Now, remember, traders, and Cameron mentioned it, and he had a great answer to that. It doesn't matter what fundamentals do. It matters what price does, right? And so we don't want to hunt. We don't want to, if we, let me take a step back here and say this. Don't chase the money, all right? Now, I know you're probably saying, well, you know what? That's why we're trading, is because of the money. And that's the wrong attitude, right? Don't chase the money. The money doesn't, the money will come with good setups. Fixate yourself on the process, all right? What is the process? Looking for that setup, looking for the buy model or the sell model. You get the you understand the process, you trade the process, or you follow through with the process, and what will happen? The money will follow. So don't let the money be the main reason why you're trading. It's about the process, okay? And you got to commit yourself to the process. So if we take a look over here, right, and we look over here on the chart, we can see a couple of things here. Number one, we saw the market had dropped back south right here. We've seen that we had a high forming here. Yeah, we had a low. We do see some market structure shift. We can see right here, we had a low right here. All right, we had a high there. So we had price going up. So we had price moving to the buy side of the curve. And then suddenly we swept the lows down here, right? And with that, now we're on the sell side of the curve, which means we're bearish, right? And so the market's created this wave structure right here. Now, I'm going to go ahead and put this in. I'm going to mark off here from that high to this low right here. Oops, sorry, wrong indicator. I'm going to mark off here from there to there. And I'm going to go ahead and say this is going to be my first wave structure moving down. So I've got a first wave moving down. Now, traders, what has happened? Price has moved way past this area right here. We've moved way past that area right there. So which means this is going to become resistance. All right? Not liquidity, resistance. Now what I'm going to do is, because that's resistance, I'm going to look over here on the top side, and I'm going to look over here and I'm going to see, okay, I see something here. I see an order block sitting over here. All right. And just at this order block, which, by the way, order blocks are resistance. All right. This is where liquidity sits. I've got a bearish order block sitting over here. And then just below that, I've got a good gap here, a good fair value gap here. That's insufficiency right there. I'm going to mark that off too as my daily fair value gap. There it is. So now I know that if price moves bullish, what is it trying to do? It's trying to fill insufficiency, right? It's trying to rebalance insufficiency. That's what the market will do. So if I see the dollar breaking north, it's coming here to insufficiency. Because why? Because I'm looking for manipulation, and then I'm looking for distribution. We have accumulation, we have manipulation, and then we have distribution. Traders, I'm understanding what the model is. It is a sell model, which means that if price moves bullish, don't get caught up in that. All right. If you want to take some short buys towards that liquidity area, not a problem. All right. But don't get caught up on the buy, because the downside move is where the money's at. This is where the smart money is going to be selling. All right. Looking for price to work its way back down. And so now I'll go ahead and do this. Once I've gone and done that, I also want to look at this. And by the way, the reason why we are selling is because we are on the sell side of the curve. So we are bearish overall, all right? And so because we're on the sell side of the curve right here, we should be looking for all sell opportunities. So the market's going to retrace and then distribute, right? So we have manipulation, distribution. Now, check this out. If price is going to distribute to the downside, what is price doing? Why does price move? To hunt for liquidity. So where is liquidity sitting at? Liquidity is sitting at this area right here at the low, right? This is going to be my sell side liquidity right here. So I'm going to go ahead and call that my external sell side right here. And so therefore, traders, this is the thing. If price moves bearish out of this accumulation, if price goes bearish right here, all right, what do I think price is going to do? All right, it's going to grab liquidity, right? We're going to grab liquidity, which means we're going to hunt for liquidity, and then we're going to distribute. And where's it going to distribute to? It's going to distribute back into that insufficiency. So remember, traders, don't be the dumb money. Don't get yourself beat up inside accumulation. Wait for market to go ahead and break out. Look for the levels where price can move to, where it's trying to rebalance or trying to hunt for liquidity. Look for those areas, and then you can go ahead and look for a sell in the distribution move. All right. And what you could do is you can simply go ahead and move it down to a lower time frame. You can look at, as an example, you can look for price to go ahead and start manipulating here. Draw a trend line. I mean, a basic, simple, basic concept. Use a trend line. In fact, it was Tori that does this. That's a whole strategy. A whole strategy is to only trade trend lines. Listen, yeah, it's simple. It's basic. It's junior level trading. But who can frown upon someone that's making money? If you're taking on a basic concept and you can make money and you're doing well at what you're doing, which she is, then you have absolutely got to applaud, right? You got to give her a heads up, or not heads up, but you got to give her a hand, right? And so this is now saying to yourself, hey, if we have manipulation and price is moving here, then I'm going to look for that distribution move. Look for price to break through the trend line, start selling it off based on that trend line break, all right? And now you know where price is going to. Price is going down here. Now, this is the dollar, right? Now, we understand that each currency pair is going to work out a little differently because each currency pair has two currencies that trading against, right? And so as we go to US dollar CAD and we look at US dollar CAD, and Cameron touched on this as well. So maybe I should touch on a different pair. In fact, let me go to Euro US dollar. Let's just switch it. Cameron did touch on this. Let me go to Euro US dollar and let's talk about this one right here. All right. Now I'm going to go ahead and clean up, nice chart right here, clean up the chart. And so what I'm going to do first, what's the first thing that I've got to do? If I'm looking at intraday trading, if I'm looking at short-term trading, then traders, I don't really want to pay attention to the big consolidation that's taking place right here. As you can see right here, we have a large consolidation move. It just came out of an expansion move right here, and now we've gone into consolidation. Now, when I look at this, I understand this as well. I understand that the market moves in waves, and that the fourth wave, which is 1, 2, 3, 4, the fourth wave, all right, is in most cases, 80% of the time, consolidation, all right? All right. The fourth wave is accumulation. So we may be in a fourth wave structure, all right? We may be in a fourth wave structure. And so that's important for a long-term trader. For a short-term trader, all I want to do is pay attention to what we have now. So I want to go ahead and look at this. I'm going to go, all right, so we have price creating low, high, low. We have this internal structure right here, all right? There's a high. So we had an internal turn of the market. So we had a market structure shift right here. So we have change of character. And then we have price moving down. So we've got this as a large wave structure going up. Now let's go ahead and see, do we hit our third wave? All right, let's put some fibs in. And we're going to go from the bottom to the top right here. What do I get? I get price moving to the 1.618. All right. Now, if price is moving to the 1.618 right here, which means that we have now a wave 1. All right. Oops. We have a wave 1, wave 2. This is wave 3 up here. This means we're in wave 4. All right. Let me do that again. Sorry, I messed that up. 1, 2, 3, 4 right here. So which means we're looking for 5, right? We're anticipating that there's going to be a fifth wave move. We're expecting price to be bullish. So currently right now, overall, I'm expecting price to move north. But traders, what did I say about the fourth wave? The fourth wave could be seen as accumulation, all right? Very often. And so what we have to do is we have to acknowledge that this is probably the most complicated wave structure. And so we're going to look for accumulation. Now, we could get price manipulating, coming back down to retest equilibrium, retest insufficiency or rebalance insufficiency, and then move north. And so what do we have? We have accumulation, we have manipulation, and then we have distribution towards our fifth wave. All right. So what I've got to do here is I've got to say, all right, I don't want to trade inside accumulation. Now, what I'm going to do here is I'm going to go to the 4-hour time frame, and I'm going to go ahead and scale it down, and I'm going to go mark off my accumulation. So here's my accumulation. You can see price is we saw a little bit of a breakout there, but this is my accumulation right here. So I'm going to go and mark it off accumulation. So what I'm going to do here inside accumulation? Nothing. All right. Because why? Because I know that either the market's going to break out north, and we're going to get and this is going to happen. This could happen. Price could go ahead and break out north, sweep liquidity up here. We got some buy side liquidity sitting over here at the top, sweep the liquidity, and then start distributing back down south to the bottom right here as price comes into, once again, order blocks, fair value gaps, and then starts distributing. Now, from an Elliott wave structure, what does that look like? If you go ahead and type up in Google irregular flat. If you Google irregular flat, this is the pattern that you can see in a fourth wave structure, an irregular flat. It makes sense because we've had accumulation, prices manipulated, we took out buy side liquidity. Once you took out buy side liquidity, prices failed to stay above. We now see a sell-off back down south towards a support level based on fair value gap, order blocks, whatever it is on a larger time frame. It's found support, and then it's time to go ahead and start buying towards the next target. So our next target on this, based on this model, would be that I would put my FIBs in here and I'll look for price to go to the 1.27 right here. So this is where I'm expecting price to move to. Right there is my fifth wave target right there. But traders, I have to deal with this right now. So I've got to realize that, hey, doesn't matter what the news does today. What matters is what price does, right? Does price break out to the upside or does price break out to the downside? If it breaks out to the downside, what I'm going to be doing is I'm going to go to my larger time frame and I'm going to say, what can I see here on the larger time frame that could hold price from going north? Well, take a look right here. There's the accumulation, all right? I see here, I see an order block sitting right here. I'm going to go ahead and mark it off, all right? There's an order block. And I'm going to mark that order block out. And so what I'm going to do is I'm going to make sure this is a bullish order block sitting over here. Hang on, wait, let me see. Where's my bullish? There it is. Bullish order block. I got a bullish order block here. Price has tested that, all right? So which means that we may end up getting just a sweep of the low, retest this, and then what I'm going to do, traders here, if this is the daily time frame, all right, if price starts coming back down here and we sweep the low, then I want to see the daily time frame run out of steam, which means we're going to get a candle, something like this. And then the market goes ahead and creates this, where it doesn't take out the previous low candle. When it does this, this is an indication that we're going to see a U-turn. And that lines up with the fact that we're in this order block. We've got to retest the order block. It's respecting the order block because we did not trade below this area. And that means if I see this, there's a turnaround expected. Once this happens on the daily time frame, then we can move down to a lower time frame and look for market structure shifts, right? But until then, traders, if I haven't got conviction on my larger time frame, I simply just cannot go ahead and trade it because I'm going to be caught up in that manipulation move, right? If I don't have conviction that price is going to move north based on the model, then I just don't have a trade and I've got to set aside. All right. Now, traders, I'm going to say this, though. I'm a trader that likes to trade short term, in and out, in and out, in and out, in and out. All right. And so based on the way the market's set up, we can look for intraday setups, right? You don't have to always say, well, you know what, if it's, this is maybe what I like to call a jackpot trade, where you're setting up a long-term trade and you've been in this trade for a couple of weeks and you're targeting 300-400 pips in that trade. There are opportunities, and I've done this, and we do it all the time. I don't know if Cameron mentioned that, but at Traders Network Club, what we do is we also chase after short-term profits, right? Because I call them the bread and butter trades. So you've got to have two types of approaches. You've got to have a bread and butter trade, all right? Have a strategy that provides bread and butter, all right? Opportunities. Have a strategy that provides jackpot trades. These are called jackpot trades because it happens maybe, 4 or 5 times a month that you get these big setups developing, and then you can go ahead and take advantage of that, all right? If that's you, if that's the type of trader you are and you don't want to go do jackpot bread and butter trades, then fair enough. If you don't have the time, there's options, all right? There's options. People that don't have time, there's options for you to be able to still get involved in bread and butter trades. Now, what are bread and butter trades? It's taking a trade opportunity that's chasing after small profits. You're looking at 20 pips. If the market accumulates a little bit more, if you build up more positions, maybe you're looking at 40 pips. But you're looking at short profit targets. And so as an example here, let me go ahead and show you a good setup that's developing right now for those that want to go ahead and take advantage of that. Here we go. Daily time frame. See here? See how this daily time frame is going to be breaking or at least closing at this point. Looks like it's going to close below that previous high. Well, when this happens, then you got to look at the model here, right? And you see here that you've had this big extension move right here, right? Price has gone ahead and moved up here, swept the high. You see here we had accumulation. Price manipulated right here. We went ahead and tested sell side, and then price has turned around, and now we've gone to our distribution target. Here was the buy model setting up right here. Now we've seen price rejection here. At this area right here, we've seen price moving slower, all right? Or the bulls are moving slower, which means that there's less conviction for bulls to hold on to that position. And that means if we move this down to a lower time frame, if you take a look at the lower time frame right here, now what do we see? Traders, you see a macro view of what we are looking for. Here it is: accumulation, manipulation, and this is my distribution move. All right, accumulation, manipulation, distribution. And traders, this is where price is going to sweep. Price is looking to sweep liquidity down here. So when I look at this, I go and say, all right, in that case, if this is where the liquidity is sitting right here, where price is going to move to, look at my downwards movement. All right, price has gone ahead and created this downward swing there. We've created a wave 1. Here we go down again. Here's wave 3. All right, so which means we're looking for price to take out that liquidity. So what I'll do is I'll mark it off here. First low. That's all I need. First low. And I'll go ahead and measure here and I'll say, hey, from here to here, how far are we? 18 pips. So which means if I can get price to move up a little higher, all right, then I'll have at least a 20 pip drop. Now I can go ahead and do this. I can say I can sell here, sell a little higher up, sell higher up, because as long as the market's staying inside this structure, I don't mind adding positions in, because once price moves down, this is the liquidity draw right here. So if we go ahead and we sell here and we sell multiple, oh shit. Sorry guys, I just had my grandson surprise me. Come here, buddy. Say hello to everyone, buddy. Say hello.
Hello.
There we go. There's the next trader. Here's your next future trader. All right. Papa coming now. All right. Okay, see you now. Okay. Yeah. All right, guys. Phew, man, my grandson just scared the crap out of me now. Yeah. He comes in here, he goes, surprise! I'm like, whoa, almost hit the ceiling. All right, so yeah, we have the market sitting up right here, and we can see that we have, yeah, he's called FX Mini Dog, by the way, FX Mini Dog, yeah. So we can see that we have the market that could potentially give us additional positions, but getting in early here and saying, hey, I'm going to get in some now, add into this position, and then know that this is my liquidity draw. I know that if the market goes up this far to the 618, I'm going up another, let's say 12 pips. And then if the market goes south right here, I'm picking up 31 pips from that trade. So you can definitely scale yourself into that position. And as price then goes into that position, you know that your liquidity draw is going to be down here. All right. Now, there's a trader says here that Elliott Wave always looks great in hindsight. Listen here. I've been doing Elliott Wave since, in fact, back in 2003, I got involved in Elliott Wave structure. I actually went ahead and I got confused with Elliott Wave. I was like, oh my gosh, this is too complicated. There's too many things. It's just as you said, everything looks great in hindsight. But the thing here is, I built out a strategy called Wave Count, which I've readjusted it slightly to make it more interesting, and not more interesting, but in fact, easier to understand. And so it always starts off understanding where your bias is. That's the issue here. Traders try to go ahead and place an Elliott Wave structure on a chart without understanding what the bias is first. First, understand your bias. Then go ahead and apply your Elliott Wave structure. All right. So here you can see right here, the first thing I went ahead and did here on this chart is I went ahead and I identified what my bias is. All right. So the model is a bearish model, right? We've got accumulation, we had manipulation. So this is a sell model. We're looking for the market to move now to the sell side of the curve, and we're looking for price to continue to work its way down to this area. And so selling here is the way to go. What Elliott Wave is doing right here, it's telling me where price is going to bounce with inside the internal model, all right? So understanding the external model is important. But more importantly, traders, you have to understand that the Elliott Wave structure, or how I plot Elliott Wave, is now telling me what the internal structure is going to do. And understanding what the internal structure is going to do is going to help me to be able to enter the market safely with good equity management. All right? Be able to get me on some short-term trades and be able to make money from those short-term setups. All right, traders, I think I'm over my time. Oh, there we go.
Hey, Gary. It's been a while. It's been exciting having you back on the show, and we had Cameron on too, so that's awesome.
Absolutely. We absolutely would love to be part of this. I see you guys are doing absolutely awesome things here at A1 Trading, and we're glad to be part of that, and hopefully to be part moving forward as well. Yeah.
Oh yeah. We'll definitely we'll be reaching out again. I want to say I love your background. I want to put it on full screen for a second, just because that looks awesome. It looks better than mine.
Hey, listen, I'm working on Cameron's background too. We got to his whole office is being redone, so it looks like a mess right now. But we're trying to get a better background for him too. But yeah, you're right. Good
All
background
right.
is
You got the
what we need.
trading battle gloves.
Yeah.
Yep. All right. Well, Gary, thanks for coming on. As James was putting on the screen, we've been putting your links in the chat as you've been going, both FX Big Dog and Traders Network Club. So guys, go click on those links and subscribe. It only takes a second and you can come right back.
Fantastic.
And Gary, I'm assuming we'll see you next time.
Yes.
We'll ask you to come back soon. So see you then.
Appreciate it. Thank you very much, buddy. Have a good one, guys.
All right. Okay, guys, we've got our next guest coming on. Nick Phillips is waiting in the back. So without further ado, I'm going to play a quick break. We'll be back with Nick Phillips.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
Hello. Good morning, everybody. Let me just make sure that my... Cool deal. Okay, microphone is on. Everything is good to go. Welcome to the 12 o'clock segment of the A1 Trading Show for FOMC Day. My name is Nick Phillips. I am excited to be here and share some ideas, thoughts, and just general market outlook with you guys. As always, during my segment, feel free to drop any questions in the chat. And at some point during this segment of the show, I will circle back to all the questions and try to knock them out one by one. All right, so FOMC Day, crazy meeting today. I think this is probably, for me personally, the most exciting FOMC meeting. Exciting might be the right word here, but it's an exciting FOMC meeting. The most exciting one since I would say maybe March, primarily due to this. This is the big, where is it? This right here is the big piece of juicy news, in my opinion. The fact that we are 100% priced in for a cut. Either we go. The markets are expecting a cut today, right? However, we are nearly 50-50 on whether we're getting 25 basis points or 50 basis points. In my experience, we're usually leaning very heavily, like 85 towards something, whether that is like a 25 basis point cut might be, let's say, 10% priced in, but a 50 or a 75 combined total together is what did I say, 15% or 10%? We'll call it 15% for 25 basis points. The rest of it is 85% total. So we lean typically heavily in one direction or the other, but today's meeting, we're nearly 50-50, and we've come down since yesterday. I believe yesterday I think was at like 62, whatever that second numbers would be, 38, I believe. It was a little bit higher here on the 50 basis point cut. So this is making the FOMC meeting today interesting. Now, what I'm going to do, what I'm going to show you right now is something that I send to my private group before every single economic data or central bank meeting These are our trade triggers. Feel free to screenshot this. Just know before I show you this that even though I have these trade triggers set up today, I'm going to be very careful on today's FOMC meeting. Typically, I would try to trade it. There's usually, or historically, there's been a very easily identifiable opportunity with FOMC for me, or there's been the potential for an easily identifiable opportunity. Today is tricky because of this 50-50 split, and because we're definitely getting a cut. And I think there's a temptation to go a cut is a cut is a cut. So no matter which way we go, we're getting a bit of ease on monetary policy that should translate to some upside for stocks and some downside for dollar, right? Not exactly. Personally, I don't think. So these are our trade triggers for today. And I'll just touch some of these real quick, and then we'll bounce over to the SEP from the June meeting, I believe it was. So in order to see some hawkishness out of the central bank today, which would be good for things like dollar buys or pretty much any other currency sells, stock sells, gold sells, excuse me. In order to see that, I want to get a 25 basis point cut. I want the Fed to not be aggressive, right? I want them to give us a cut, give us their typical cut. I want the 2024 dot plot to show about 75 basis points worth of cuts for the rest of the year. And then for 2025, 100 basis point cuts for the entire year. The 2025 unemployment rate, I want to see that hanging out at about 0.3%. I believe we're there now. Let me double check our unemployment rate real quick. I should probably know this off the top of my head. We'll go 4.2. Okay, so we're hanging out at 4.2%. We don't really want to see that go too much higher through next year. We want the unemployment rate to, I mean, if it comes lower than this, even better, even better. But any higher than this, and that's a little bit too much instability in the labor market for me. And then 2025 GDP, we want to see that sitting at about 2%. And we want some of these things to be talked about during the monetary policy report and the conference afterwards. Economic activity is expanding at a moderate pace. Job gains have slowed. Unemployment is up, reflecting some cooling in the labor market. The outlook remains positive, and the committee decided to cut by 25 basis points, viewing this as a measured adjustment that aligns with current conditions. So, done the job on inflation. Labor market is slightly cooling. We want to cut, but we're not going to be drastic about it. We're going to take a measured adjustment. This is a measured move. This is a very moderate kind of approach to easing what some consider to be tight monetary policy, right? That's sort of the feel that we want from the Fed in order to see this initial reaction of dollar upside, stock and gold downside. Now, on the dovish scenario, the opposite scenario, a little asterisk here. We want to make sure, well, first asterisk on the hawkish side of things. This is the best case scenario for me personally for a trade opportunity. And I'll tell you why once we get to the dovish side, once we talk on this note. But just so you guys know, this hawkish scenario is my ideal. If we get this out of the gate, I would love to get involved in something. I would love to look for a technical opportunity. Enter most likely going to be looking at possibly pound buys, because we got the data wasn't crazy this morning. I didn't trade it this morning, but we got slightly warmer CPI information out of Great Britain this morning. And as you can know, the pound took that in stride. So this is when it dropped at 2 a.m. my time, and we had a pretty decent upside move. I didn't get involved in this at all because the data wasn't a surprise to the market. So this response can't necessarily, we don't trade like that. I don't trade like that. If we don't have a surprise in the data, I'm not going to take the trade. But regardless, it was slightly warmer out of CPI. The pound reacted with that warmth in mind. And so if we get reasons for dollar sells on the dovish side of things, we're looking to buy the pound up. Regardless, this is not my ideal area because I think that there's the potential that a 50 basis point cut ultimately ends up communicating to the market that the Fed is behind, that they are a little bit more worried. Maybe they're communicating, maybe they're letting on. And I think the potential for recessionary fears to enter the market could happen, in which case, dollar downside in this scenario would not play out for very long. You can't make a judgment. You can't say, oh, it'll last for the first half of the meeting and then fade away, or it'll last for 5 seconds and then the markets will be buying up the dollar because they're scared of recession, blah, 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 right? You can't really determine how long it's going to take for that reaction to kick in, but I do think there's a pretty high probability that a 50 basis point that gives us an initial spike down on the dollar. It's just a matter of where that spike down goes to. But I could see something like big spike down, recovery, right? And so while the way that I trade means there could be a slight opportunity to grab this on the way down, I'm not excited about selling the dollar off of that, off of a 50 basis point cut, especially because the markets are expecting a cut no matter what. We're expecting 25 basis points or we're expecting 50. There's an argument to be made that we are 100% priced in for either scenario, meaning the dollar is so far to the downside. It's positioned so bearishly that this could turn out to be a buy the rumor, sell the news kind of play, where we started getting hints of, in the last few FOMC meetings of the year, we're potentially going to be seeing some cuts. Okay, we started getting some of that talk back in here. So, you buy the short option on the dollar, theoretically, right? You buy the rumor, and when the news actually drops, well, you're going to liquidate those positions and you're going to take the move back up, right? So there's potential for a buy the rumor, the news play, the other potential for the recessionary fears to kick in, which could elevate the dollar, which for me means dollar downside, no matter what, is not very attractive today. Of course, I'm not saying it's impossible. I'm just saying personally, I don't want it. I have no interest in selling the dollar off of any cuts today. Let's see. Okay, so on the dovish side of things, for that initial dollar downside, potentially sustained, but not something I expect to be sustained, would be a 50 basis point cut today, and then the dot plot for the rest of the year would show 150. This is like ideal scenario. This is definitely dovish. Which these two things right here, the dot plot for 2024 and 2025, plus the unemployment rate. I'm not too worried about GDP, but the unemployment rate plus the dot plot projections, if they're this heavy, this could give us a decent enough move to the downside for me to want to get involved. So this is why I said I started this whole thing out by saying today is very nuanced. Today is very tricky. I'm going to be incredibly careful trying to trade this. It's going to be a little tough to navigate, but regardless, In 2024, on the dovish side of things, if we want to get dollar sells, stock and gold buys, we're going to be looking at 3.9% or 150 basis points in cuts for the rest of the year, and then another 125 basis point cuts in 2025, and a unemployment rate of 4.5%. And then we want to see in the notes and in some of Jerome Powell's speech that the committee is increasingly concerned the economic momentum is waning, that the risk of failing to achieve a soft landing are rising. And in light of those concerns, the committee has cut the target range by 50 basis points and is expected to take further forceful easing to address economic challenges. While it sounds like a no-brainer for a dollar downside potentially, the fear, the risk sentiment portion makes taking the dollar lower a little bit sketchy for me. So let's jump over to the last SEP that we got in June. If you guys know all this stuff, follow up with any questions for something maybe you don't know. And if you don't know this stuff, this is $1 million worth of game right here, in my opinion. So when today's FOMC meeting happens, they're going to drop something called the Summary of Economic Projections. And usually page 2, this is pretty much all I end up going through on this, well, and the dot plot, but page 2 and the dot plot really what I look at. So page 2, table 1, this is their projections for change in GDP, unemployment rate, PCE inflation, core PCE inflation, and the federal funds rate for the rest of this year, next year, the year after, and then beyond 2026. So how do we read this? Well, avoiding the change in real GDP because we don't really have changes here. Let's jump to unemployment rate. The SEP gets released in March, June, September, and I believe December. And so you can see here we have the unemployment rate and then the March projection. This is from the June SEP. So in June, the unemployment rate, the FOMC members projected 4.40 for the end of the year. We're hanging out at 4.2 right now. It's not great. Presented some decent opportunities when we did get those numbers. In March, they projected 4.0 by year end. So between March and June, their year end projection for the unemployment rate did not change at all. Okay, let's go to 2025. Their projection in June for by the end of 2025, unemployment rate of 4.2. So a slight rise from 2024 and a rise from their March projection. So in the March SEP, they projected by the end of 2025, unemployment was going to be hanging out at 4.1. They changed that March and June and adjusted it to 4.2 by the end of 2025. This is where we're hanging out right now. So we're at 2025's year-end unemployment rate now, and it's not even the end of 2024. Slightly scary. And then 2026, again, in June, they estimated 4.1 by year end of 2026, which is up from the 4.0 projection of March. So these numbers, and again, for longer run, 4.2 up from 4.1. I put a little red dot by these because this puts downward pressure on monetary policy. With rising unemployment rate, you have a bit of downward pressure on monetary policy, or on the economy, I should say, on the labor side of the economy. So V asked timings, Fed meet. I'm assuming asking what time is the Fed meeting. We get the monetary policy report and the SP an hour and a half. And then half an hour after that, we get the conference. All right, I'm gonna come back, Big Guapo and El Dean. I'm gonna come back to y'all's questions, okay? All right, so coming back to this, PCE inflation projection numbers. In March, they projected by year end of 2024 that we would be at 2.4%. Now, or in June, They increased that projection to 2.6. Thing for 2025, it was at 2.2. That got increased, and 2026 stayed the same, and the longer run stayed the same. And then for PE, we have again another rise in the projection between March and June from 2.6 to 2.8, and then from 2.2 to 2.3. And the federal funds rate, they expected by year end, back in March, we were expecting 4.6%. In June, they said actually by the end of the year, we're probably getting at 4.1. 2025 went from 3.9 to 4.1. 2026 stayed the same. And longer run, they increased their longer run projections from about 2.5 to 2.8. Excuse me. So some upward pressure here on potential policy, and slight downward pressure on future policy. So bit of a mixed bag sort of out of the last SEP projection. But this is how you read this. This is where these trade triggers come from. This is where the dot plot comes from, and the unemployment rate. So if we look at the 2024 dot plot, 4.6%. You could read the dot plot here. It's so much simpler just to look at the median element of this table and go federal funds rate. Cool. So for 2024, in order for us to get a hawkish reaction, we want to see the 2024 dot plot showing 4.6%. So we want this number right here to be 4.6. Come back to the original March projection. And then 2025, we want to see 3.6. So we want to see this come down to below the March projection. And the unemployment rate 4.3 and GDP at 2.0. So we want the unemployment rate to be 4.3 and this to be 2.0 in order for us to get the hawkish reaction. So that's how you utilize this portion of the trade trigger sheet that I have here for you guys. All right, let's see. The notes, some of the notes that you're going to find that I have adjusted here, monetary policy notes, you're going to want to read through this monetary policy statement, right? The press release. Most of the time, I find that a lot of this information can be found in some of the latter paragraphs. Obviously, this first paragraph is something worth reading, but usually you'll see something in assessing the appropriate stance of monetary policy. The committee will continue to monitor the implications of incoming information for the economic outlook. Committee would be prepared to adjust the stance of monetary policy as appropriate if risk emerged that could impede the attainment. So this is basically all just saying they're data dependent. This paragraph is pretty key most times. It'll tell you today, actually say whether or not they're looking to aggressively cut for the rest of the year, or if they're going to be taking things moderately and data dependently. So sort of a little masterclass, I guess, mini masterclass, I would call it, on trading FOMC, getting prepared for it. This is pretty much the process I follow every single time one of these meetings comes up. I want to know, that's not fair, I guess, entirely, because every meeting do we get the SEP projection. So when we don't get the SEP projections, I really focus on the monetary policy notes, and then obviously the rate decision. All right. So let's touch on a couple of these questions. What do I think about Euro USD? For me, Euro looks very bearish, even though if we have a 50 basis point rate cut. Euro USD, let's go check it out. I'm going to look at Euro USD on the futures market. It's the exact same thing. It's the euros. This is the exact same chart. Maybe this gap will make you feel like it's not, but let's go check. The only difference is this actually shows you the candlesticks that happened in that time. we'll touch on Euro USD just so it's a little bit easier. All right. So personally, I like the positioning of Euro, almost in a like a central standpoint. Let me confirm that before I get ahead of myself here. It's definitely bearish, bigger time frames. Not necessarily against the dollar, though. So again, you have to remember with the 50 basis point cut, something I would expect out of Euro USD would be something like this. We get the 50 basis point cut, let's say. I would expect, boom, a spike up, dollar weakness, right? But then I kind of expect that move to get faded. So I would be careful trading this to the upside for long, meaning if we get the 50 basis point cut today, for me, because I trade, I'm kind of a madman here. I go down to the 5-second and the 15-second usually within under a minute of things dropping. If I can process the information fast enough, which central bank meetings are a little tougher to make that happen, especially one like today. But within a minute, usually I'm in. So if this is going to spike up, there's enough movement on the lower time frames for me to get in and get out and not hold. Now, if this was a different scenario, if I didn't think a 50 basis point cut could potentially, spark recessionary fears, I mean, I would stay in this thing for the entirety of the meeting. If we got the 50 basis point, we get 50 basis point cut, the dollar starts reacting in a bearish manner, and I can capitalize on a decent entry here. Cool, I'll get in. And then what I do is just hold this with stops trailing below lows and eventually get taken out as, structure breaks, and it may continue in my direction, but it doesn't matter. I would have got my profit and got out. So Euro USD, there's some potential upside at the spike, at the initial drop, but I don't necessarily have all the confidence in the world that it would be a sustained move, and that's purely due to the fact that I think if we get that 50 basis point cut, we may end up seeing dollar strength regardless. I think the markets might start to freak out a bit over an aggressive Fed, which would push the dollar up, which would theoretically push Euro USD to the downside. All right, let's see. I see gold heading to. So pretty much, again, a lot of this is going to be a bit nuanced based on the initial spike and then the follow-through move. So give me 1 second here. Gold is a tough one. Gold is tough because of the current area of price at. For me, I'm not interested in getting involved in gold at all. There's just no easily identifiable opportunity here for me. With that being said, I don't want to say it's not as simple, because on this dovish side of things, I'm saying US dollar sells, but eventually again US dollar buys, right? I think gold buys are the move sort of either way on a dovish reaction. although we may have some spiking price action. And the reason why the gold buys of the move is because if the dollar buys end up coming into play, if the dollar strengthens up coming into play, I don't anticipate gold to be moving opposite the dollar during that time. If you're somebody that has a blanket statement in your mind, like I did for years, that gold moves opposite of the dollar, I encourage you, go back historically, check that. It doesn't always play out like that, especially during times, and actually most evidently during times when risk sentiment is skewed to a off scenario. So remember, a 50 basis point cut today could lead the market to go risk off. It could lead the market to go, the Fed is being really aggressive with cuts. That's not good for the economy. That scares me. I'm going to pull my money out of risk assets and put it into safe havens. So you see the dollar and gold go bullish at the same time. And then on a hawkish scenario, gold sells. I think gold sells are perfectly fine for the hawkish scenario, but because of how strong we are on gold, I don't know how much of a sustained move we could get out of gold. Gold is going to be tricky today. Gold, for me today, gold is I don't even want to look at it. I don't want to look at it. I don't want to think about gold today because of how sort of tricky the opportunity of identifying a move is going to be. Personally, I think either way this goes, I can't really carve out a super solid edge out of this. The best edge out of this for gold is the opposite of the best case scenario for me, which would be the dovish side. Gold buys, I think, if we get that 50 basis point cut, gold upside kind of all day, regardless of whether the dollar ends up fading the dollar downside or not. If the dollar spikes to the downside off the news and gold spikes to the upside, but then the dollar ends up rallying, that dollar rally, I don't think is going to drag gold down, because the dollar rally is based off of risk sentiment, or it would be based off of risk sentiment, and gold is a safe haven, so it should theoretically be reacting bullishly as well. So 50 basis point cut, gold buys potentially. 25 basis point cut, I just wouldn't even bother touch gold on that, to be honest. If we get a 25 rate cut, at what level do you foresee a level for sell off on gold? All right, so Erica asked, if we get a 25 basis point rate cut, at what level do I foresee a sell off on gold? Pretty much just touched on that. A 25 basis point cut, I just don't I don't love gold in that scenario. I don't love trying to trade gold in that scenario. I would expect somewhat of a almost immediate reaction, where if we're hanging out at these levels ahead of the meeting and we get that 25 basis point cut, I mean, almost immediately, these current levels, I would see a sell-off, but it's just a matter of how far is gold gonna sell down to? Yeah, just not my best, not my most exciting opportunity there. So, not necessarily any key levels. I would say if it's gonna fall, we're at the levels that it should theoretically fall from. All right. I guess gold between 2530 and 2600, but we don't know the direction yet. Okay. Can I please? Okay. Everybody's asking about gold. I touched on gold. Recessionary fears could be good for gold, though. No. Yes, that's exactly what I'm saying. So that's why I think the best case scenario for a gold trade is going to be this dovish scenario. Because if we get the 50 basis point cut, we see that dollar initial downside, theoretically, we should see gold upside immediately. And then if the recessionary fears kick in off of 50 basis point cut. The Fed has been overly aggressive. Now everybody's scared. Well, gold should theoretically still continue to rise because it's a safe haven. So yes, absolutely. Recession fears could be good for gold. Somebody said, I have a network issue. I don't know if anybody else is experiencing that. Please let me know. Prior to jumping on, everything was good. So, all right, guys. Let's see. What to touch on next? I believe we touched on basically everything that I have ready to go for the FOMC today. Let's touch on Doxy. So my outlook for Doxy is basically dollar upside no matter what, or maybe I should say eventual dollar upside no matter what, because that 50 basis point cut, even though it could potentially spike us down, I think there's that risk of the recessionary fears kicking in and pushing the dollar back up. So you have to be mindful of that. We'll go here and draw this like this. Pretend scenario 1, we get a 50 basis point cut. I can see for all the liquidity sweep, or that whole idea, I can see a liquidity sweep, or a, when I was learning technical analysis, we put it, they're bear and bull traps. It's price breaks out above a support or resistance level and then shoots back the other way. So this is a bear trap if it does this. Liquidity sweep, as the kids now say. So I can see that happening. I could see an initial spike to the downside, which for me, because I scalp, there's money to be made in this move, but it's not something I would hold long term, because then I could see something like this happening, and over the course of the next couple of days, doing like maybe a head and shoulders type deal. And then with the 25 basis point cut, I kind of, that's going to be tricky, because I think with the initial cut, we may see a slight spike to the downside. When I say slight, I mean within the first few minutes, it might spike down and then spike back up, or it's just going to immediately, the market's immediately going to react in okay, 25 basis points, not that big of a deal. Let's look at the projections. Okay, projections aren't looking like they're going heavy for the rest of the year. They're going to do 75 basis points by the end of the year, and then 100 next year, total 175 over the course of the next 18 months, or really, I guess, 15 months. So, we're kind of aggressively priced to the downside. Dollar rally. Sweet. Dang, sorry you guys are experiencing a lag. I'm not sure what to do about that on my end. All right. Any news on US 100? Not sure if I missed it. Joined a few minutes ago. If you're talking about like 900, I'm tempted to stay away from gold and equities today, simply because their reaction function off of risk sentiment be a little funky. So for instance, on the dovish side of things, let's say we get the 50 basis point cut. Typically, this heavy of a cut should be good for stocks, should be good for S&P 500, NASDAQ, right? Theoretically. But again, that looming potential of the market to see the the aggressing from the Fed being an indication of potential recession, kicking off recessionary fears, encouraging people to take their money out of risk assets, which all stocks are risk assets. So flows from NASDAQ into safe havens, right? So while the dovish scenario could be good for the stocks to go initially bullish, I see a little bit of risk skewed to the downside. And then on the hawkish scenario, stock sells on a 25 basis point cut. I don't think it's outside of the realm of possibility. It again is not the best trade in my opinion, because we are still getting some cuts, which would be good for stocks. It's certainly not aggressive, but we're not priced in aggressively on stocks for cuts. Not as aggressively as we are on the dollar per se. So potential stock selling off of hawkish, the stock moving up off of the dovish reaction is just it's going to be a little tricky, a little nuanced. So I'm staying away from stocks today. I'm going to really be focused on currencies, and the one that I would love to get involved with on the dovish side would be the pound. And then we're going to go hawkish side. What do I want to get involved with on the hawkish side? Probably yen. It's either going to be yen for me or euro wouldn't be bad. So yen or euro. It's today's FOMC is kind of it's a bit of a tricky scenario here, but yeah, hawkish side, I'll be looking at yen. I'll be looking to sell the yen on a hawkish print here. I like sort of this downside move we have here out of this head and shoulders area. I think we're due for a bit of a bigger technical recovery here, theoretically. And personally, I'm targeting this area here, which I touched on the last time I was on the show. I touched on this being the level I would love to start buying the out of. So if we get a hawkish print, selling the yen, and then if we get the dovish print, I'll be buying the pound. So I'm gonna keep it real simple today. Not look at gold, not look at stocks, just focus on currencies. So pound USD, yeah. So I would love to trade this up off the back of some of that CPI reaction if we get reason for dollar downside. So in this scenario, the dovish scenario, I'll be looking for a pound upside, and then in the hawkish scenario, I'll be looking for yen pound upside on dovish, yen downside on a hawkish outcome. Sentiment on gold. So I just touched on this a few minutes ago. NLT, gold is tricky. I'm staying away from stocks and gold today. I'll touch on it for you to tell you kind of what I'm thinking, but it's not something I'm super interested in taking. However, I will say that I should maybe jot this down here. How can I do this? Best case for gold. And the reason why this dovish reaction, I think, would be the best case for gold is that initial spike. Theoretically, again, all the markets can do whatever they want. So this could drop and gold could fall out of the sky for whatever reason and continue to fall out of the sky, and you're going to see everybody in the on Twitter or X going 50 basis point cut and gold fell to the downside. Like, what is going on? But I think it's the best for gold, and there's a higher probability of a spike in gold after this much of a cut because of its natural function acting opposite of the dollar. Maybe not opposite of the dollar, but we'll say it. A negative correlation to the dollar for the most part. So that initial function sending gold higher, but then the problem with US dollar trades off of this dovish reaction being the potential for recessionary fears to kick in, which would then drive the dollar up, even though this dovish stance should send the dollar down, right? Those recessionary fears kicking in, flowing into the US dollar as a risk asset or as a safe haven will also theoretically throw liquidity into gold as a safe haven, continuing to push gold higher. So you have that initial reaction function of a contrarian asset to the dollar. Dollar pushes down off the 50 basis point. Gold initially pushes up. Even if the dollar recovers as a safe haven, gold being a safe haven should continue up. So for me, maybe not for me because I'm not going to trade it either way. I don't really want to get involved with gold. If I was looking to trade gold, I would only be trading gold today off of a dovish 50 basis point plus these dot plot projections. Be the only way I'd want to get involved with it. IGIFX says, I am still away from buying or selling today, waiting for FOMC and see where they stand with projections. Yeah, that's, the way that I'm approaching it is I don't anticipate taking any trades today. Honestly, I think there's a middle ground between these two, and we may end up there. In which case I won't be taking anything. And while this is the best case scenario for me to take a trade, I'll tell you why I'm so hesitant, I should say, or I guess I'm wanting to be a little bit more protective of my account today, and that's because of this right here, this near 50-50 split of the current pricing and model. To me, that makes today really tough. We're 100% priced in for cuts, but we're 50-50 on whether we're going to get the moderate typical cut or a more aggressive 50 basis point cut. This throws a wrench in all my plans and makes me not super excited about trading anything. So yeah, absolutely. IGIFX, staying away, letting the market react, letting things settle out. I think it's a great approach to today, and end up being what I ultimately end up deciding to do. Which, if you guys are a newer trader and you haven't sat through many of these meetings or much economic data, not trading is a trading decision, right? That's something I try to tell my guys. I go live with a private community every day or for every red event, and I tell them not trading is a trading decision. You have to keep that in your back pocket. So IGIFX job on remaining patient and staying away today. All right, let's see. Cole J said 0.25, 25 basis point cut is equal to dollar strength, and then slow, steady dollar weakness, and 50 equals recessionary fears, dollar weakens. So let me touch back on the trade trigger again for you. A 25 basis point cut should mean there's a potential because it's a cut, because a cut is a cut is a cut, right? There's the potential that when we first get this cut, we see Doxy drop to the downside. Absolutely, that potential exists. However, I think that a 25 basis point cut is going to communicate to the market that we're too aggressively priced in for dollar downside, and we should see that dollar strength, right? And if the dollar strengthens off this 25 basis point cut, I think maybe that might be a bit of a more sustained move. So good opportunity for a scalp, also decent opportunity to be buying the dollar up. I don't want to say obviously not forever, but there's a decent amount of price action here before we get back to this big area of consolidation that we see. We scale out on the 4 hour. There's a lot of heavy price action, price hanging out in here. We'll just mark this up. I'm only going to mark up where it's at, hanging out in this zone. So because there's so much heavy price action here, if we're going to go bullish off of today's news, which I think either way, it's almost at some point we're going to see some bullishness out of the dollar, I would say this would be my first target range back in the 104 to 105 price area for the DOX. And then 50 recessionary fears, dollar weakens. So no, not dollar weakens. I think again we're going to see that initial dollar weakness off a 50 basis point cut. We could, not will, we could see some initial dollar weakness, but ultimately recessionary fears could kick in. Without recessionary fears kicking in, dollar weakness all day. 50 basis point cut, aggressive monetary policy. My dollar assets are no longer bringing me in as much off of the interest. So it weakens the value of holding assets in the dollar, right? Should see dollar downside. But if that 50 basis point cut ends up communicating to the markets the potential for a recession, then that dollar strength coming back in is a risk. So that's why I said this is not my ideal scenario today, because you can't necessarily guarantee that. I mean, you can't guarantee anything in trading, obviously, but you can't guarantee that the recessionary fears are going to kick in. But there's such a high possibility of that I don't like selling the dollar even off of this 50 basis point cut and the aggressive cut projections. Again, because of that recession, the potential for the recessionary fears. What's he trading now? I'm not in anything right now. I am going to be waiting for the FOMC information to drop. I'm going to wait for the SEP projections to drop. I'm going to wait for all this information to hit the market, and then I'll be looking to get into something if I get the right opportunity. If not, I have no problem walking away from this today. For me, I have plenty more opportunities coming up. I have GDP tonight for the New Zealand dollar and the employment change for the Australian dollar, and tomorrow Bank of England meeting. So these are actually the GDP, NZD, GDP, and odd employment change. I'm looking forward to these more than anything really for the rest of the week. And then for the rest of the month, next week is going to be pretty heavy. I believe this is Monday, the 23rd. It's either Monday or Tuesday. Flash PMI day. It's one of my favorite trading days. Tend to typically get good reaction functions out of flash PMIs. So yeah, again, not too worried about today whether or not I get an opportunity. It is what it is. And I think that's, the most responsible way to approach the market any day is if the market gives me an opportunity, it gives me an opportunity. If it doesn't, it doesn't. So Iri-san said FOMC in 30 minutes. No, FOMC is in 1 hour. It is going to be kicking off at 2, I believe, unless I'm wrong. No. So we have FOMC 1 hour from now, and the press conference is an hour and a half from now. Can I look at CAD JPY? Yeah, I can. I don't really know. I mean, we have FOMC coming up. I don't know what the point in looking at CAD JPY would be. There's like, these are, I would trade, if I was going to trade anything today, CAD JPY wise, it would be USD JPY, not CAD JPY. But I'll take a look at it for you. So this is because I'm going to base this purely off of my JPY outlook, which is I would anticipate a little bit of some resurgence in yen weakness over the coming weeks, just as a sort of a recalibration of this yen strength. I believe this downward move here off of CAD JPY is a product of the yen strength over the last few weeks. But I think we're due for a bit of a correction. And I can see that correction popping up into this level of resistance, forming this nice shoulder, head, shoulder scenario. And then I would be looking to sell CAD out of here. Now, as for today, because this is obviously a much longer term idea, it's tough. It's kind of one of those things where it's like, personally, I'm going to be looking at this today because I mean, I don't want to buy here. I don't really have a solid reason today to be getting involved in buys on CAD JPY, and I certainly don't sell because we're at this area of support. I don't like selling into support. So honestly, IFX, I would ignore CAD JPY. There's so many other assets you could look at. This is just not something worth trading this immediate environment. Now, granted, if you want to go ahead and set alerts for this one area, once price taps back up here, I would be looking for selling opportunities for sure. But that could be a couple weeks from now. All right, Friday JPY rate hike. Is there a JPY meeting on Friday? I tend to I don't pay attention that much to JPY because they are notoriously tricky when it comes to their decisions. Yeah, monetary. Okay, so press conference. Do you see this right here? Tentative. This is why I don't trade Bank of Japan press conferences, monetary policy decisions, none of that, because like they just throw them out whenever. They don't have a set time. Trading Bank of Japan is really, I don't want to say it's impossible, but it's a pretty difficult task. So I tend to not even pay attention to it. I mean, I pay attention to it after the fact, but I don't try to anticipate anything with BOJ. It's rather difficult. Michael asked if I can look at GBP USD. What are your thoughts given the recent data and upcoming meetings? What about a carry trade unwind after the FOMC and JPY as a safe haven when the global central bank cut rates? CAD is the weakest currency among all the majors and the oil price is weak, maybe shorts. I mean, it's just difficult because again, I'm not opposed to CAD JPY shorts. I just would like a better pricing opportunity out of CAD JPY shorts, which for me would be up this area right here in between 111 and 112. At this previous resistance that's been tapped multiple times, I would love to sell CAD JPY out of there all day long. But as far as getting involved at these levels, I mean, theoretically you could, and just have you just be accepting a little bit more risk window, So as opposed to getting in on something, this may be simple to you, but as opposed to getting in on something like this and maybe taking it down to these lows, you're getting in here, stops at the same level-ish, and we'll go targets at the same level. You just have a crappier trade from these current levels. If it taps up into this 111 area and gives you a proper price action indication, I see no reason not to sell CAD JPY from there.
Hey, Nick.
Hey, how's it going, Chandler?
Hey, I don't think we've ever spoken before, unless I'm
No, we have
mistaken.
not. No.
All right. Well, this is cool then. So it's nice to meet you face to face, I guess.
Nice to meet you too, man.
Yep. We've got our next guest coming. I appreciate you going for as long as you did. That was a lot of help for us. Me and
Sounds
James
good. No problem.
Well, Nick is in Greece fighting a Minotaur or something. I don't know what he's doing, but
Sounds awesome. I'm jealous.
yeah. Oh, yeah. He's the ultimate bull. Oh, yeah. So, guys, I've been putting Nick Phillips' Instagram. He's got his Instagram here. So go give him a follow, as I was also putting his YouTube in here as well. So make sure to go find Nick and all the places he's at. I think he's on, you're on X as well, or Twitter.
Yeah, X, YouTube, Instagram.
Yep. And you do a blog as well, I've seen.
Yes. So I do a blog. I primarily focus my blog writings for there's some articles that are good, but that's mostly for my private community, to where I send like trade ideas and stuff like that.
Okay, cool. So a lot of cool stuff Nick's got going on. So make sure to go find him. He's making a lot of content. So go find him and all of his locations. And Nick, thanks for coming on. We'll see you next time.
All right, Chandler. You guys have a great one.
All right. All right, guys. Now we're going to take it over to Chris Pulver. He's going to take us the home stretch. We've got FOMC on the way. We're going to hear what Chris has to say. So right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Wednesday. Happy Fed Day. It's just after 1 p.m. and this is the day we've all been waiting for. Interesting trade discovery this morning. Did my little daily profit play with my members, and we did take some profit, but we managed early instead of our typical profit target. We took about half of it off, and even right now, the trade that I'm looking at, it's still trading elevated to where I wanted my profit target, and it is now 4 hours after opening bell, which is not the typical trade. So we definitely had expected move is way higher than yesterday, but the IV rank hasn't changed much. This market is just clearly building a lot of anticipation, around FOMC this afternoon. Nobody knows what price is going to do. I did take a trade. I posted it in the A1 trading service, the Discord channel for my Chris's trades. I posted it right in here. If I go to Chris's trades, this would be a stocks options trade. I did take a 569 long call on the SPY, and I did that based on this little guy right here. So I do see this really nice gamma level with a large current net position at 1854. There's no guarantee this trade works, but if we have volatility one way or the other, FOMC is notorious for being noisy. All right. FOMC is the market's excuse to move. There's clearly a lot of orders. Like, think about this. The entire market is sitting here with a big finger ready to press buy or sell. And I don't know what that button is because there's two of them right next to each other, and I don't know how it's going to play out. What I can see is gamma squeeze potential. I can see order flows pushing higher. I can see the market initially having a positive reaction. But as Nick Phillips alluded to, I mean, our Fed watch tool continues to change, where yesterday, I think I looked at this in the afternoon after closing bell, it was 65% in favor of the 50 basis points cut. That is then reduced back down to 55%. So it's not quite 50-50, but man, only 50 minutes away from the actual rate decision. This is about as tight and as indecisive as I've seen the actual rate decision. Now, we are pretty certain that there's going to be a cut today. That cut is either 25 basis points or 50 basis points. I think the 75-point move would be a big surprise. I don't know if that's good or bad. If we take a look, and this is really where I'm just judging today, it's going to be price action that leads everything. I'm not looking to have a ton of exposure going into this. The trade that I showed you, that 570, it's a 569 call on the SPY, but that expiration is out to Friday, not today. I'm not that interested in 0 DTE. The trades that I'm taking for my hedges, I have an ES hedge for the 927 and 930 expiration. I have the SPY, the QQQ, and NVIDIA plays that are vol plays out to the 10-4 expiration. I'm still watching, my /GC is gold futures. My SI is silver futures. Those trades are out through October, through November, through December. I did put on another trade today. I talked about this one. I talked about it in my live session yesterday. I'm now running a 3 p.m. live session called Final Hour. And I put on a trade this morning in BTI, which is British American Tobacco. It's similar to what I've experienced this year in MO, which has given me a nice pullback. And my covered calls are up to $50 and $52.50. So I will keep an eye on this one. This has had it's a good dividend play. It's like a 7 to 8% dividend that's pretty solid and very consistent. We've also had a lot of appreciation this year from the low 40s all the way up to $55. Pullback is totally fine. I'm still going to stay in this one just for dividends. But if we get a pullback below 50, that's fine. I don't get it called away then. If I do get it called away, that's okay. Every account's going to make like 10 grand. If it doesn't get called away, then I'm just going to continue to play the covered calls and give myself some upside, lower my cost basis, collect those dividends. We're getting like a 94 to 98 cent dividend every quarter. Last one was an ex-dividend of 102. That means that I grabbed $1,020 for that quarterly dividend. And, a lot of those dividend plays too, it's like it does drag the prices down typically when we have those dividends declared. But it's also a pretty range bound stock that, lows at 50, highs at 55. And if it pulls back, I'll just trade it again and just kind of continue to lower my cost basis by keeping the dividends. But we're pretty stable around this like 40 to 50 bucks. So I'm doing that with the same idea as BTI. It's behaving a lot of the same way. The appreciation we've seen in BTI off these lows is very similar to the appreciation that I saw in MO. And so what I'm doing is I put on a 35, a 33, and a 30 put, staggered out to summer of next year, so like June of 2025. And then I also put on a January of 2026, same thing. It's a 35, 32, and 30. Basically, what I'm looking to do is I want to own the shares. I want to own it for the dividends. I want to own it for stability. And I want to see if price can go up towards $52 a share. So if there's any pullback here, I'm looking to get assigned. If there's no pullback, I'm looking at about $800 in income over that 12-month period or so. And if I want to, I can protect half the profit and then be a little bit more capital efficient and then deploy that capital elsewhere. But that was a new one that I threw in. It's definitely more long-term, but near-term plays, as you may have seen me post in my trade section for the A1 Discord. A1 Trading Discord is the SPY trade for this morning. That's a 569. BTI, I put that in. And then I did the vol plays. IBIT, I've got some dollar cost averaging levels. NVIDIA, that's a volatility play for October 4th. Palantir, I'm looking for a credit spread. Win, LVS, those are two stocks I'm looking to buy in. AMSC, I'm long. NDX, I got stopped out in a broken wing last week. Let's see here. Futures trades, I'm putting in some hedges on ES. I posted those. There's a 930 expiration and a 927 expiration where we had a really nice butterfly trap last week for I'm trying to think, ended up being my net. I think I paid like $6 debit and ended up making a net $9 profit, which was pretty solid. So that made up for, taking one loss, taking one win. I'm not doing the double-sided butterfly this week. I'm just taking one side and looking for the downside. And the reason why I'm doing that is because to me, my portfolio does pretty well. If things just kind of stay as is or things go higher, everything looks really good. So what I thought we could do today in the the 45 minutes that I have left until the actual FOMC comes out, and Chandler and team, if I'm going to be on through FOMC, will you guys let me know? I think Frank and I could probably tag team some stuff. I'm good for a full session until like 2:50 p.m. So I can marathon for you guys a little bit. If we wanted to actually play FOMC from Jerome Powell's press conference and see a little Q&A, I'm happy to do that. Like I said, I just have to bounce around 2:50 p.m. But like I said, it's going to be about price action. What I'm curious as far as the language goes, as far as our dot plot, if we can pull that information up, if it's released right at 2 p.m. What I would look to see is, where are all the other Fed, where's the Fed consensus? The dot plot is supposed to be anonymous with, all these different Fed speakers and Fed members. And are they all in consensus that there's going to be X amount of cuts through the year? If we look at the watch tool here, the market's anticipating 10 cuts over, let's say it starts today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I have 11 FOMC meetings on this calendar. Okay, this is kind of crazy. We have 11 FOMC meetings from September 18, 2024 to December 10th, 2025. So over the next year and change, we have 11 FOMC meetings. Now, 10 cuts are expected. Okay. That is an aggressive cutting cycle. Now, what I think is going to be key to Jerome Powell's language today is that the Fed is cutting to be less restrictive. Okay. I think that's important, because if they say that they're cutting because of concerns, if they're cutting because of employment concerns, if it sounds like they're cutting because they have to, that might be where the market reacts adversely and maybe the market sells off. Okay. But if they're cutting, acknowledging that, look, the PCE is at 2.5%, 2.6%, inflation is trending lower. We acknowledge we don't want to see employment news get worse, but we have data that's going to come in over the next 30 to 45 days. Also, the Fed is not going to be political, right? Whether we had an election this year, November 5th, it doesn't matter, because the Fed is supposed to be non-political, supposed to be. But I know it's being painted as like that November potential rate cut in November is going to be seen as a political move. If they say, look, it doesn't matter, it just so happens we fall during an election cycle, but this would be the path forward. This is what the Fed is going to do. You just kind of address that today, because if they say they're doing it to be less restrictive, here's where the benefit is, right? 5.5% now versus a 2.5 to 2.6% PCE, which is the preferred measure of inflation, or even the 2.5% CPI that was year over year that printed last week. The Fed has some cushion to bring rates down and be restrictive. Now, the market's pretty much anticipating that they're going to cut aggressively and get all the way down to essentially neutral. Okay. Now, neutral does bring back inflational concerns, because if we cut from 5.5% down to 2.5% and inflation still is sticky right around these mid twos, inflation could flare back up, and all of a sudden the Fed is now behind, and the rate is underneath inflation, and we have stickier for longer, higher for longer. And then the Fed, do they have to change policy again? Do they have to actually hike by another 25 to 50 basis points? So I still think the Fed for right now is just going to start the process. I think if Jerome Powell, and look, I don't know about you, but I've been around with Powell as chair, Yellen as chair, Bernanke as chair, Greenspan as chair. Before Greenspan, it was Volcker. Before that, it was Burns. We don't have a lot of Fed people to go on, but I will say that Powell's a pretty smart guy, and he's been, whether you like him or not, he's been really, really consistent with being the head of the Fed. Like his language, his press conferences, I mean, I would count on maybe two to three fingers that there's like, wow, what a crazy move because he said this. Other than that, this guy doesn't give much away with his language. And I think there's a time and a place for, I mean, when he pivoted hard in December of last year and the market ripped aggressively, when he pivoted this summer, when we saw that melt up in June and July, those were really specific. I mean, that was the first time he just explicitly said it's time for policy to change. Well, that gave the market all it needed, and we kind of, ran into higher highs and pushed higher. We had that 6 days in a row with 6 all-time highs, and then we topped out mid-July. But here we are, the market's aggressively buying the dip, anticipating rate cuts. Like I said, I think the proper language to show that the Fed is doing the right thing, acknowledging they need to cut. If we're going to have an additional growth cycle through this late cycle expansion, right? We've been in expansion for a long time. We've been in a bull market since 2009's bottom with some hiccups along the way, but the market has ultimately made higher highs. So whether you like it or not, all the volatility or not, all the recession concerns or not, all the signs, everything that seems like, oh my gosh, this market. Look, risk has to be managed because I don't know if the market's going to fall 10%. I don't know if the market's going to fall 5%. I don't know if the market's going to drop 30%. I don't know if the market's going to go up 5 or 10%, right? But I did find it interesting to read this morning. So my point is, if the language is we're doing it because we can, we're doing it because we see now it's appropriate that we can be less restrictive for these reasons. And they list it all out, and it seems like, hey, man, the Fed's in control. Their narrative sounds confident and optimistic. They're not feeling like they're behind, and the market's not acting like they're behind. Maybe that's the good thing today. And if it's 50 basis points and they justify it and they give them, they give the market what it needs to just be happy for the next 30 to 45 days as we kind of wade through the data, honestly, maybe price action is just really, really sloppy and choppy and messy, and we don't have a lot of direction. That too would make a lot of sense because all this stuff from 25 to 50 basis points has been priced in. All right. That doesn't mean we turn around and sell right away. And it's the buy the rumor, sell the news. If we have a sell off, I'm curious to what degree. Are we going to see a 1% sell off and then it pulls right back? Are we going to see a 3, 4, 5% sell off? We saw that right after Labor Day, but it pulls right back. It might just be volatile. And I've said this. I mean, the market might be volatile. Let me get rid of this chat here for a second. Okay, the market might be volatile. There's a lot of ways to consider this. Okay, I'm just going to talk simple price action. If we go this way and this way, this would be a pattern that we could go down and back up and down and back up and maybe down here and back up, but it doesn't really change any structure. This to me would be a potential setup for a breakout. Because it's an ascending triangle, we're making higher lows. The bulls got us into this momentum to the upside, and we're looking to see if the bulls can then continue to take us out of that. I could see price doing that and not really giving us any clear direction, right? To the downside, I see this low, and I see this high. If we pop up to these highs but fade, I could see a bit of a broadening pattern where we have a fake out to the upside, and then it sells off. And that puts in an intermediate top, and the market does spend some time over the next maybe 30 to 45 days decreasing, going lower. Here's an interesting thought that I posted this morning in my Discord and Telegram. Let me find it right here. Okay. Yes, the Fed has cut with stocks at all-time highs, and the bulls tend to like it. S&P performance after Fed cuts within 2% of all-time highs, right? This is the S&P going back to 1980. If you can see these little dots on here, we cut near all-time highs, we cut near all-time highs, we cut near all-time highs. Same thing here. All these cuts near all-time highs. If you can see my graph, I know the numbers are probably really small. Let me see if I can zoom in here. Nope. Let me see. There we go. Everybody see this? So the 1 month return. So officially today is going to be the cut, right? So if they cut today, the average 1 month return is actually negative 0.2%. Okay, well, September also averages anywhere between 0.7% to 1.2% negative for the month over the last 5 years, 10 years, 70 years. September is not a good month, and we're not done with the month yet. So there's a chance that we might still have a rough month ahead, and it's just volatile, and then we figure out how to get through it. But let's say that you look out past today and past this week and past the end of the month. Let's see where the market is. Well, 3 months after that first cut, the average return is 2.1% higher. The median return is 3.3% higher. And 15 out of 20 times in the past for the last 40 years, 15 out of 20 times this market has been higher. So let's go out 3 months, October, November, December. By the end of the year, this market is going to be higher, according to this, 15 out of 20 times. That's pretty good odds. If you think about it, if you were a trader, which all of you are here, Okay, 15 out of 20 is a 75% probability this market will be higher. That's a pretty easy thing to position for, and it doesn't have to be super short term. All right. So that's 3 months out. 15 out of 20 cases have been positive. 6 months out, the average return is 3.8% to the upside. The median return is 6%. 15 out of 20 months, also a 75% positive track record. But that's a bigger return, right? 3.8 to 6%. What's crazy is 12 months from now, the market has been positive 20 out of 20 times for the last 44 years. That's pretty impressive. Now, that's why I said earlier, it could be different this time. Because what if we break the streak? What if we go 20 for 21, which still looks really good? But what if a year from now, by September of 2025, we're not higher, right? But all this has to do is be 0.1% higher. And that would officially be 21 for 21, even if it finishes just a fraction higher. So I do expect the Fed is doing what they can to kind of sustain this growth cycle, even in the late stages. We're seeing these rotations into defensives. We're seeing this rotation into utilities. We're seeing this rotation into things that typically don't lead a bull market. But late cycle, before we officially turn and before things really contract, these are where the defensive plays start to come in. And I mean, again, maybe this reignites tech. Maybe this reignites a lot of things because it's going back to money supply is increasing, cheap money is coming, cheaper money is coming. People are going to be bailing out of those fixed income instruments like money markets and certificates of deposit to then see either 5.25%, 5.5%. All of a sudden, they're going to start going down to say, "Oh crap, I'm now down 50 basis points or 100 basis points." It's not the same to have risk-free trades, so it's going to force them to maybe take on a little bit more risk, maybe go into something that's inflation friendly. Assets tend to go higher. The dollar, I think we can all agree, the dollar is likely going to be what's sacrificed in this next phase. If we go higher, I think the dollar is going to be a big reason for that because the dollar gets weaker. I think there's big money on the sidelines that is still, I mean, we've seen a dollar trend lower for the last couple of months, but I still think there's a lot of dry powder waiting to sell the dollar even further to the downside. So even if the dollar gets stronger in the near term, I could still see dollar weakness. The yen pairs, everyone's concerned about this second deleveraging, this second unwinding of the yen. I could see it happening, but I still don't trust the Bank of Japan, and I don't think anybody else should either. They are the most radical, extreme central bank out there, where you never know what you're going to get other than when you're wrong, you're dead wrong. When you're right, move your stop loss to break even and then rack in thousands of pips. But it is such a like binary black and white experience with the Japanese yen. You're either right and you're loving it or you're wrong and you're hating it. And that's pretty much my experience for 20 plus years in trading the yen. So I don't like to trade the yen that much for that exact reason, because I don't think it technically obeys like a normal currency pair does. It's a weird, fundamental, irrational currency. And I don't like to trade that. I trade currencies because it's very efficient. It's super liquid. And when we see the Japanese yen behave with just really aggressive risk on or risk off tones, and we see these irrational 3, 6, 9 months trends, I don't like being on the wrong side of that move. So, I've had some harsh lessons in the past. I've made a lot of money in the yen when I think I can, but I've also had way more stress on yen crosses than others. So to wrap this up, we'll go into some charts here in just a moment, but I just want to show this. I thought this was really interesting, right? So we're sitting here near all-time highs. The S&P is literally within 1% of all-time highs. And you look out and expect, in the first month or so after today's cut, whatever happens, 25, 50 basis points, whatever happens, the market's going to deal with some chop, right? The market's been anticipating, by the way, this is the first rate cut that we're going to see in the last 4 years. So you talk about, an interesting cycle from, emergency cuts to bazooka stimulus and COVID to now to one of the most aggressive rate hike cycles we've ever seen with the Fed and the U.S. economy. And somehow this market soaked it all in, took it all in stride, ended up going to higher highs on the backs of Mag 7, on the backs of AI, on all this hype. Is it sustainable? Is it too frothy? Is it too rich? Is it too high? Maybe. Okay. But I would imagine that we're still creating the landscape right now that would promote growth. And growth, also with the weaker dollar, could be a great place to be long stocks. Could be a great place to be long, ETFs or, the indexes as those broad market indexes go higher. I'm not doing a lot of rotation into defensive. I did add Walmart to my portfolio. I'm still in some dividend plays. I do a lot of index trading, but I'm hedging both ways. I'm obviously looking for asymmetry to the upside, but I am taking stabs at the downside just in case for near-term protection. I think managing risk is always a constant. I think it's silly to be exposed if you got something all of a sudden like an event like August 5th. If you get caught off guard by an event like that, it's pretty painful. So I try to keep those risk adjusted returns as tight as possible. So anyway, interesting stuff. Just want to share. We go into right here just to finish this. So the Fed increased interest rates at the fastest pace in history, sold nearly $2 trillion in their balance sheet, yet the S&P 500, the Dow Jones both hit record highs yesterday and, continue to push like they're looking to go higher. The Fed rates near all-time highs, 20 times. The S&P was higher 20 times. Now that's after 12 months. It obviously is a little bit rockier, 6 months, 3 months at 15 out of 20, and then 9 out of 20 with 1 month, but bad track record. Also, this is interesting here. There was a 14% jump in mortgage applications as mortgage rates hit a 2-year low. So this is one thing that would be a benefit to the consumer. If mortgage rates are going to drop by 25 to 50 basis points, that might be enough to start getting people to look again for homes, to start looking, be willing to sell, be willing to buy, look to refinance. And it's just starting. I'm trying to time it a little bit better where a house in March or April, like I'm closing next year, I'm looking for a home that I can close on, and hopefully the rates are coming down aggressively. If we can see 100 to 125 basis points of cuts, I can go from a 6.2 30-year mortgage, which is right now's rate. That's the standard going right here's your 30-year. I mean, if this automatically goes kind of step by step with the Fed, we might see rates down as low as 5%, without having to do anything. So 5% and then offering a buy down, maybe I can close at a 4.75 or 4.6. That's not too bad. Not too bad. Makes a big difference as far as the bottom line of what your overall mortgage costs, So anyway, I think this is a good cut for consumers. I think this offers a little bit of relief to small businesses. I think one benefit of rate cuts would be the Russell. So this is one instrument that I'm watching pretty carefully. I do want to put on some trades. If we come back into these 200 levels, I'm still looking to stay long the Russell. If we're looking for growth and we see some catch-up trades, Russell still looks good to me to the upside to maybe celebrate this milestone hitting all-time highs. This index has more room to go versus S&P and Dow at all-time highs. The NASDAQ obviously has had a decent pullback, a 15% sell-off July to August, and it's just trying to find its way back. But are we going to see higher lows and lower highs? Are we going to see this in the NASDAQ? It's quite possible that we do until there's another catalyst to drive this thing higher. So I'm just not looking for V bottoms, right? I'm not looking for V bottoms. I know the market seems like you buy dips and sell rips and it's all day, every day. But most of the time, the market doesn't move every day. Okay. So we have to wait and see. And today we're going to get a lot of information in the next, 30 to 60 to 90 minutes. We're going to see a lot of price action. It may actually go somewhere. It might be noise. Okay. I don't know. Watching this, there's my 570 gamma, like I talked about. That's the strike I'm looking for. If I see this price go up here today with the FOMC, with Jerome Powell's press conference, then I'm taking some profit on my SPY longs. I would be ready for a potential downturn and a fake out. I could absolutely see a bull trap at these all-time highs. Why? Because everyone thinks example, totally hypothetical here, but the rate decision is 50 basis points and the market just rips higher for today and then fades it aggressively tomorrow and Friday. What are people going to think? Is it good or bad? People, it's like everybody operates. I mean, it seems like the order flows right now, they just operate such short-term levels where you just kind of, if you're exposed in the near term, you've got to be really aggressive at taking, protecting, getting in and getting out, taking your losses in stride, taking your wins in stride, and just grinding. Longer term, look at that I just showed you. 12 months from now, 20 out of 20 times in the last 44 years, the market's been higher. So if I take that as any type of confidence moving forward, I don't have to say I'll just set it, forget it, I'll see you next September, right? I mean, I want to trade it. But at the same time, I think that if I'm going to have a tilt to the upside, it would make sense that history says that's a safe play for right now. And I look at it this way. Right now, until the end of this year or even into Q1, those are typically the most bullish periods that we have. If we can navigate September into October without having a terrible drawdown, I think November, December is just blinders on, path of least resistance. going to these big open interest levels, going to these big wide open targets, and hopefully getting there. And then we have all of the, the extra, I'm trying to think, the leaps and stuff that are expiring in December and January, all those big long-term options, all those are factored in. And so end of year, we typically see like bullishness because of that. And it's thinner volume during the holidays, but the market just kind of goes into drift mode, and it's pretty easy just to stay bullish. So I'm pretty bullish at least until January of next year. I'm pretty much, that's my outlook. So what I'm doing is I'm taking my stabs and hedging to the downside just as little protection to kind of give me those asymmetrical payouts. If I need it, I'm glad that I have it. If I don't need it, I'll take the small losses. I'll move on, watch the portfolio go up, and hopefully we see this thing kind of move up uninterrupted. But we're going to have some volatility, right? I don't think anybody would be shocked to see from this current look of the S&P that this market is going to be potentially pulling back. Let me draw a little line here. I mean, would anybody be surprised if we poke up here and then we pull back down? I don't think so, right? I mean, if we pull back to the September sell-off lows, are we coming all the way back down to August lows? Not necessarily. I don't think so. Okay, so even if it was choppy in here, okay, we're just going to deal with it. We're going to deal with indecision. But I would use this area. I like this area a lot as a chance to buy. In fact, I'd be buying aggressively down here, looking for that move back up. Even if all-time highs becomes a profit target, there's still plenty of income to generate. If we come back here and bounce a couple of times, there's a lot of short-term opportunity to buy and protect, and see if we can repeat the process. So that's trading as opposed to buying and holding, So we'll see if that's what it does. All right. Let's see. 25 priced in, 50. I disagree. I think 50 is priced in. I think 25 to 50 was priced in on this rip from June to July. And then we had the scare with the Japanese yen, and we had the SOM rule activated, but the market got right back to it because all of a sudden we had unemployment claims started to trickle lower. We also had, I'm trying to think what else we had in here. We had like some positive news that did come out, and that was all of a sudden we're thinking good news is good news, bad news is bad news, and the market's like, we're fine, right? And then everything kind of cleared out, like the cannon fodder cleared out from the Japanese yen, and the Nikkei bounced in a big way. So anyway, I mean, we're right back to the highs. So I think the market is ready for 50 basis points. But I don't know. We're going to find out, right? So let me go into currency strength for a second. Let's see what we have here. This is today's current volatility. We had the Japanese. All of a sudden, we're right back to baseline. New Zealand's a little bit stronger. Swiss in the middle. We have the yen and the pound on top. So right now it's New Zealand, pound, yen, Swiss on top. We've got Aussie, euro, dollar, CAD at the bottom. Volatility has been somewhat contained. The downside, the weakest move this morning was the dollar for a little bit, and it's pulled back slightly. The Japanese yen was strong, and it's pulled back to baseline. So by the end of the day, I mean, we're going to see what this is made of. I mean, I would expect some type of volatility expansion going into the end of the day. I don't know which is going to emerge as our winner today. Maybe it's New Zealand. Maybe the Aussie, New Zealand, if we have some risk appetite, Aussie, New Zealand start to assert themselves as the top dogs today. If it's not, then we'll see. But I would expect there to be some type of volatility expansion to the upside. Now, let's go to the dollar. Everyone asking about this currency. I see pound dollar. Just look at the dollar. Okay, the dollar index, there's no activity that I want to take on the dollar right now. Why? Because there's no real decision to make. I would like to see this. If the dollar fakes and reverses, I could see that as a bear trap, and all of a sudden we see a short-term pullback on the dollar to one of these two levels. This is the halfway point of the range, and this is the resistance level of the range. This goes back to the last 2 or 3 years. So if we see the dollar remain in this really choppy sideways move, I just don't want to sell the lows, okay? So if I'm selling the lows on the dollar, that means I'm buying the euro dollar higher, I'm buying the pound dollar higher, I'm buying high, I'm selling low. I hate that as a currency trader. So I don't want to take that trade. So what I'm going to look for is this. If we go lower and we fake out, I think that's a bottom. I think this dollar gets stronger in the near term, and we're going to see if that translates to a stock market that sells off in the near term, okay? But if we start to see the dollar immediately rip up here and then start to fade, That's a good opportunity for stock markets to go higher, dollar to get weaker, start breaking into fresh new lows from 101 to 100.50, back down to 100, maybe into the 99s, 98s. I mean, I've got symmetry plays all the way out here towards 95 and 94. If the dollar is going to get that much weaker, there's a lot of movement. There's a lot of potential weakness in the dollar that could keep the stock market and commodities and gold and Bitcoin and everything much, much, much higher. Okay. Because remember, today is not just a near-term thing for the dollar. The market is probably looking at today as where's the next big move on the dollar? Because you know what the market might catch wind of? How many cuts is the Fed going to do over the next year and a half? Because you can see what this says. This shows out to December of next year. The market's anticipating the Fed rate's going to be down to 2.75 or 3%. 2.5 to 2.75% lower than now. That's what the market expects. And so if the market is now officially going to say, okay, let's start pricing that in, the dollar could certainly get a lot weaker. Okay. So I don't like this trade right now because I feel like we're selling lows and I hate that feeling. So I'm not going to do it. But if we go break and pause, then I'm looking for any type of rally to fade. I'm looking to see if this will actually play out with a symmetry move down here. There's a lot of support all the way back into those 2021 lows at 92 or 91. But I just don't want to get faked out by a bunch of noise that we see right now. This to me is a bunch of noise. Okay. And so even on the first initial breakout, I'm not taking that bait just in case this thing reverses. And we have this range that you can all see it. You can all see the range. We have support. We had a fake out here. We pivoted right there. This is a strong support level at 101. So between 101 and 100.50, there's a lot of support there. I could see the dollar using that as support and bouncing. So if we end up getting into open space, I'd want to see it take out the low, then look for any type of move to fade. And we see the dollar gets weaker and respective currency pairs, move with dollar weakness. Okay. And Damon says dollar end of year 105. Well, if it is a 105, then you're catching it here at the bottom because this would be a good spot to be looking to get long. There's a nice swing opportunity. I mean, the nice thing is if this is a fake out and the dollar comes back up here, that dollar move to 105 or 106 is a fantastic reward to risk trade for probably a 2-to-1 or a 3-to-1. It's just a trade, But to the downside, if this is more of the same and I don't want to see just a first break. I want to see a break and a pause, and then I'll look to see if we actually push lower, and then I'm looking to fade, take some breakouts, and go with it. So it's a critical spot. I think the dollar has proven it wants to go lower, but to me, it's a bit oversold. It's a bit overextended. This has been the market pricing in some cuts by the Fed. Has it priced in all 250 to 275 basis points? I don't think so. But it certainly priced in the first little change where the dollar is getting weaker as we come into today's Fed. Okay. All right. So that's the dollar. So when everyone's asking euro dollar, pound dollar, euro dollar is trading at 1.1120. I mean, you could look at this a couple different ways. There's some resistance here, right? There's some resistance here around this 112 to 113 handle, but the next big level that I see on the dollar is all the way up towards 115. So don't be surprised. I mean, and again, we have this nice little breakout. If this is a break on the euro dollar to the upside, a little consolidation, if we see more dollar weakness, euro dollar can certainly head up into 115 before I look for some type of top and then maybe see it go the other way. But I don't know. I mean, to me, it's like I missed it. I was looking to buy the euro dollar back at 105, never got the opportunity. So this whole move from these higher lows, I didn't trade the euro dollar. At this level, I'm interested in selling, but I'm not going to call the top because we have all this indecision and resistance back here on 115. So I'm just going to let price tell me what to do. Okay. Pound dollar, same type of thing. Okay. Pound dollar has been a little bit messier, but we are making higher highs and higher lows. Until this trend line breaks to the downside, I would not be short the pound dollar, right? I wouldn't be short the pound dollar. I didn't see the pound really react to this level right here. So I'm not trying to short this thing. If this wants to go long and stay long, there's a little bit of structure right around this like 136 area, but a nice round number is 140. If we get all the way to 140, that's when I'm going to say I'm more interested in looking for tops on the pound dollar. So from 132, let's say we pull back into 130. Let's say we pull back into 128. Look, I like looking for pound dollar long all the way up towards 138 to 140. But it may come with some pullbacks, which offer a good opportunity to buy this thing a little bit lower. And, stop losses still make some sense. Look for some confirmation on those turns. But 130 is a good support level. 128 is a good support level. And unless I was going to see price all the way back down below 127 or 126, I think pound dollar looks good to the upside. But again, that's basing it on a dollar, dollar weakness chart. Okay. All right. So that's dollar crosses. We got some other ones, Aussie dollar, New Zealand dollar, still pretty sideways and choppy. Both of these look fairly good if they can break out. Aussie dollar, we have some, nice structure in here. I would love to see if the dollar gets weaker. I'd love to see this breakout back to this level here. Open space. If we measure this move and we duplicate that, we're looking at probably 74, 75 in the upside for the Aussie dollar. It could happen, especially if we have a run in commodities. If we have a little risk on trading in China, if we have a weaker dollar, the Aussie could really be a nice beneficiary of that. Okay, so that's what I'm watching on dollar crosses. Gold, let's go oil, gold, silver. Oil's back up. It was just off the 70 handles. We're back at 69.50 for right now on U.S. oil. Still looking to see if this let's say $67.50 to $65 area acts as support. If it does, cool. If it doesn't, then oil has been giving us a bit of concern. Like this has been a potential slowdown in global demand. All right. Now I say that, and the commitment of traders and like hedge funds have been net short oil at record levels. And with commodities being as cheap as they are, something is making me not want to sell oil. I'm not doing anything big on oil other than a couple of credit spreads, a ratio spread or something like that on USO. But I'm just looking to see, to $65 hold. If it does, awesome. If 60 holds, fine. But I'm looking to see if this just stays in a range. Back up into 80 to 85, resistance at 90 to 92.50 or 95. It's just a range to me. So if this level holds support, intermediate level and resistance. So if we can hold and bounce up here and stabilize, this is where I'm putting in my trades. Anything above that gets me paid. Anything below that, I'll take a small loss. But I'm essentially looking to put that line in the sand right around $65. Okay, that's oil. Gold and silver. Gold had a nice little breakout last week. I think that gold is due for a pullback. I'm still watching gold versus silver. I'm hoping that silver actually outperforms gold in the near term, or medium term for that matter. Look, a pullback is due. I'm not looking to sell gold. I'm just looking for pullbacks to offer a chance to buy lows. So if we have a pullback on gold, this is another reason I think the dollar may get stronger in the near term. A pullback in gold may be seen because the dollar gets stronger in the short term. Gold pulls back. We could have a couple spots to watch. Pull back to here for a short-term bounce. Pull back to here for this past resistance area becoming support. Okay, or pull back even to this trend line area where this is where I look for a bear trap and then look to get long and stay long on gold. So there's a couple of spots that I'm watching, but I'm definitely more medium to long term. I'll just buy whatever dips I can get my hands on in gold and continue to keep it anywhere between like 3 to 5% of my portfolio. But I do like gold. I'm just not buying highs. If it goes higher, I'm just protecting profit and managing trades. If it comes back lower, I'll reposition with fresh trades. I'm going to trade GLD a little bit more. I'll trade GC for gold futures a little bit more and try to put in some trades there. Silver ran right up into resistance and has turned the last 3 days. We had some indecision at that $30 to $31 top. I've said this actually for the last couple of months. If we don't have a convincing breakout to the upside, I could still see silver doing this and still kind of getting into this building phase, accumulation phase before we have the direction I'm really looking for. So I'm not buying the highs. I didn't put on a bunch of fresh positions. All my trades on silver are sitting down here with stop losses below, plenty of wiggle room to see silver, soften up a little bit and then see if we get some pullbacks. But I'm looking to buy silver. If we come back towards $26, I'm looking to buy. So between SLV, between SI, I like those levels as support. I'm still looking for price to hit my measured move at $35.88 and upwards up to like $45. If I'm watching gold versus silver, so XAU, XAG, compare the two. I'd like to see if this range continues to play out. So if we have lows here and highs here, there's obviously some wiggle room. You know, it's not a perfect range. It's not perfect resistance. But if this does head lower, that means that silver can outperform gold in the near term. I'm okay with that, right? What does the price look like between XAUUSD and XAGUSD? I just think silver looked better than gold. Or maybe it just goes up faster than gold. Okay. So once we get down to this area, doesn't mean that I have to get out of my silver position. It just mean that gold might be due for a nice little bounce. So anyway, I'm long silver, I'm long gold, and I'm looking to see how much longer I can hang on to them. I'm looking at really both of them are still accumulation phases for me. Good levels, pullbacks, good structure. I'm looking to add some exposure on gold and silver. Okay, Bitcoin, we're up to 60K right now. We're still making lower highs and lower lows. Bitcoin is certainly going to be one to watch. We've made lower highs over the last couple of months. We're still in this big swing consolidation cycle. I hope that Bitcoin just continues to operate like this and maybe give traders a chance to accumulate some. I like the idea of 50K and 40K and 30K. If they're offered, I think those are good spots to look for. Now, it might be that simple. I'm offering, I'm looking at some dollar cost averaging levels at those numbers like 50, 40, and 30. But I'm also trading IBIT with the same type of idea, dollar cost averaging to that. It's a fraction of the cost because it's a share price that kind of correlates with Bitcoin. I'm also long on MicroStrategy with a variety of option trades trying to generate some income. There's a 10-for-1 split. So that means I actually could own MicroStrategy outside of having fractional shares. I've had, several $1,000s of MicroStrategy for a few years now, and it's behaved a lot like Bitcoin, which has done pretty well. But what I'm watching is this high, this high, this high. If we see Bitcoin head down again, I'd almost like to see it take out these lows and then start making lower highs. And then this structure becomes the thing that I watch, because I can start looking at those dollar cost average levels to accumulate. And I can also watch and wait and see if and when we have this breakout, now I can start getting some confirmation to the upside and then actually take the bullish trade that I want. So Bitcoin is something.
Chris, how's it going?
What up, Frank? How are you, man?
What is new? What are you looking at?
I'm looking at everything per usual. No, I'm going top down. We went through dollar, a couple currency pairs, the S&P, the Qs, the Dow, the Russell, oil, gold, silver, Bitcoin now. Mag 7 wise, I haven't seen a lot of movement today. If I go into the Mag 7s, we have Apple up 1.7%, which is actually one of the bigger movers. Everything else is flat. Tesla's up 1%, Apple's up 1%. Apple's actually up quite a bit today. Interesting. I'm not sure if there's any breaking news on Apple. Let's see. Wall Street position, 50 basis points cut, highly dovish comments. Well, we'll see if they deliver. Apple, iPhone demand softer year over year, UBS says, but yet Apple's up. JP Morgan reportedly in talks with Apple for credit card partnership. Okay, that's interesting news. Apple's like trading the S&P pretty much. So it's not the S&P, I understand, but it trades like it. So we'll find out. But yeah, other than that, things are going to kick off here in about 7 minutes, Frank. I see you're popping on here just in time for the FOMC. What are your thoughts, man? Share some comments and commentary. We talked offline a little bit, like 25 and 50 basis points. What do you think?
Yeah, so judging by the history of this year, it's been a lot of noise on the FOMC days. So usually there's a pop either way, and then it comes back to break even by the end of the day. However, today is probably going to be different. If we are getting that 50 basis point cut,
yep,
and the sentiment around it is highly dovish, I think that's going to be probably this might be the meeting where we get a big move, because all previous times this year we've paused. But if we see that 50 basis point cut, I do think that the market has potential to move very heavily today. I saw in the Discord you had a SPY call for Friday.
Yep.
That seemed like a pretty reasonable trade, considering if we spike really hard today,
yep,
you might get a good IV move there on your SPY. You could close out, or you could wait. What I'm looking at right now too is gold. I would like to see it come down, but if we get a 50 basis point cut, I can't imagine why gold would be coming down. But if we do get a retracement, I'd like to buy gold at either of these levels right here. So 25.30 and 24.70. These are just two previously broken support zones, and the past few days have risen above this channel. I like that as a good technical spot, but we'll have to see, because if we get that 50 basis point cut, I think the markets might take off, gold might take off. And then later on, either the rest of this week or next week, they might be assessing how bullish a 50-point cut is going to be.
Right.
So I think maybe what we could see is an initial spike could last 30 minutes, an hour, or whatever, or it could last for the rest of the week. And then following that, I think maybe in the next few days or next week, they start assessing, okay, well, the Fed had to step in pretty aggressively. They had to cut more than they had projected at the beginning of the year, because jobs market is slowing down. Inflation is at like 2.5%, which is good, but they had to step in and be more aggressive, and that might not be a very bullish sign. So I think probably today, I don't want to jinx anything, but I think we could be going to a bullish market, at least initially. But again, I see limited upside. We're at all-time highs almost on the S&P. And if we break those, I'm not sure how much higher we're gonna get from there. That's just where I'm standing right now.
Yeah, I agree. I mean, if I drag a fib from high to low, I mean, we could pull back to this 127. We could have like a one. I mean, that's 580. 580 could then fade and fall. We could still. I mean, there's all sorts of ways I can draw this stuff, man. I mean, if we somehow get to 580, but then we pull back into maybe this low, I mean, there's all sorts of volatility. Like maybe we have something like that, Frank, where it actually like connect the dots, blow off the top a little bit, get to 580, but fail to get to 600, and we turn back in and we have like another sharp support level test. I think the reality is the cut's finally here. We're just going to figure out in 3 minutes here, is it 25 or 50 basis points, assess price reaction, and then the market's essentially just going to wait. Like, what happens to the next level of employment data? What happens to the next round of inflation news? All this matters because the only thing we have from the Fed from now until November 7th is going to be an FOMC minutes release. There's nothing else from the Fed. So this is why I said earlier in the week that I could see a 50 basis points cut justified, because they're looking to say it's appropriate to change policy. We're going to do it. We're going to start a little bit more aggressive so we can, soften any type of labor news or blah. I don't know, whatever Powell wants to say, however he wants to say it. But I think it gives them, in the absence of actual Fed talk, it gives them the ability to say, okay, well, if job numbers come in as expected or slightly softer or slightly better, I mean, they've already cut 50 basis points. So rather than thinking in the next 30 days that the Fed is absolutely behind, they can get ahead of it now and say, here's 50 basis points for you. Chew on that. We'll be back in November and we'll assess whether to do another 25, another 50. And then 25 for the end of the year still gets us up to 1%. 25 and 50 by the end of the year still gets us to 125. It's like there's still anywhere between 0.75 to 1.25 to 1.5% cuts on the table before the end of the year. That's a really aggressive Fed. And what's going to be tricky about their language is it doesn't necessarily mean that they're dovish. It just means that they're trying to say we're going to be less restrictive. We've waited long enough. It's time to shift. We think it's appropriate, blah, 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 blah. So there's a very crafty way they can say it today. And again, price action is going to sniff it all out and it'll figure out what to do. So,
yeah,
but there's a lot of ways to draw it up.
Another thing to look out for today, at least, or the rest of this week. So, yeah, they can cut now by an aggressive amount, and then they can wait, I guess, in their next meeting in November, see where things are at. Like if the jobs market is steadied, maybe they'll pause. But if we go 50, is that to say that we're going to be in consecutive rate cuts going forward, or what? And that's definitely a question. But at the end of this week too, we have triple witching, I believe, which is like
Friday. Yep.
The in the options market. So Friday we have that. That's something to consider as well.
And a month and a quarter on Monday.
These highs on what?
the end of month, end of quarter. Friday is triple witching with them. It's the index expirations, index futures expirations, and stock expirations all Friday, the 20th. And then the following week, we have the 27th and 30th, which will be like end of month, end of quarter. So we got a couple more weeks of pretty decent volatility when it comes to order flows and options. All right, dude. News is in. I'm getting a lot of choppy price action here. Initial reaction is price going higher on the S&P. I'm imagining that we've got a 50 basis points cut. Somebody report the news. Yep, Garrett says 50 basis points. Okay, so we just cut 5.5%. Again, could be very noisy. Obviously, you can see that orders have been waiting all day, and you've got some big fingers on the buy and sell button. Keep an eye on things. So I do have limits in on my SPY order, by the way. That 155 debit, I put in a 350 credit. I'm trying to get closed out if we hit 569, 570 today. Let me take a look and see how that's trading right now in real time. Right now, I'm up about $100. So if I look to close, it's trading about 2 and change, 250. I'll keep an eye on this one. I've got it set to 350. And we should roughly get there. If we hit 569, 570, we should be getting close to that. If we look at the options chain, yeah, I'm showing a $3 bid right now, or $3 ask rather, for the 569. If we push up towards 569, 570, now we're above $3, 308. So I'm up about a 40-cent debit. The heck was that? That was a credit spread. I'm up to 322, 325. All right, I'm going to move the stop loss on that long call. Let's get up to 570 today. Come on. I'm up over 100% on that SPY long call. Okay, I'm going to move stop losses at least. Let me see that gamma squeeze. We're right there. Come on, baby. Go tag some 570 for me. You freaking turd. All right, I'm going to keep an eye on that one, dude. I don't want to see this fade. I want to see if this will keep pushing. All right, so chart alarm's going off.
Yeah, the initial reaction.
Yep, it's okay.
It's probably not telling us much.
This is why I also did the expiration out to Friday, because we can obviously have a lot of noise. Look, this move could do this for the next couple of minutes. This is a 5-minute time frame. We could go up here with this large, it's trying to go higher, but the next candle could be a fade. It could be really, really choppy today. I'm just watching, but you can tell that all the order flow is waiting for literally 2 p.m. I mean, this market didn't do anything all day. By the way, if I have anybody that's with me in my daily profit play this morning, it still wasn't hitting our profit target in full 15% by the time we rolled into FOMC today. It was still trading like $5 bid, 510, 515 mid. Crazy. Like, it just took all day. And I mean, we were out of the trade in the first 30 minutes, but we just took partial profit. So, okay, I've got the SPX hitting 5669. All right, keep an eye on this one. Here we go. So, and the reason I'm not adjusting the stop loss right now is because I do think there's enough volatility that I could get this thing stopped out at $1.55, at $1.60. So I don't want to move the stop loss, because I could get tagged at the stop, and then if we go up and retest today's high, or we hit 570, that is still the gamma squeeze I'm watching. So that's why I put in the 569, so I can tap that level and try to get that full profit. That was close, man. I saw it trading up to around 325, but now it's $1 off. So I'll just keep an eye on it. So let's look at the tail of the tape. Says this. I mean, we did have FOMC minutes. You seeing any headlines? Here we go. So the actual was 0.5%. So they did cut. The official rate is now 4.75. Let's see here. Came in below. So it's crazy that the calendars never changed. The calendars all said 5.25. They came in 0.5 actual. The median view of the Fed funds rate out to the end of 2025 is 3.4, which the previous says 4.1. The CME watch tool, the futures market is pricing in way more cuts than that. But I want to see what the dot plot reads. Fed funds rate at the end of 2026, 2.9. Gain greater confidence in inflation moving sustainably towards 2%. That's all BS. There's no way we're coming back to 2%. There's no way. We're going to operate in a 2 to 3% landscape. No, I think we're going to operate in a 2 to 3% landscape for a while. I think the Fed is willing to burn the economy hotter, get this last bit of growth, kick this out there until inflation does become really stubborn and they can't get it much lower than 2.4, 2.3. I don't think we're coming sub 2% anytime soon. And honestly, if we're increasing money supply and we're cutting rates, it's not as restrictive. And so I just think inflation gets a little stickier. But anyway, that's for another conversation. Let's see, PCE inflation end of the year 2.3 versus 2.6. So they're looking at inflation projections being softer, which is good. 4.4 unemployment rate at the end of 2024 versus 4.2 now. So they're looking at a slight uptick in unemployment. We'll see if the market, doesn't like that. 2% GDP growth versus 2.1. So that's an upward revision of GDP. U.S. futures price in a rate of 64% chance of 25 base hits in November. Here's your dot plot. Let me take a screenshot of this. Okay, so we have consensus. Let's see. If we're going out to the longer run, there's a bit of variance between 3.5 and 2.5. So what we'd like to see in the dot plot is we want to see like one big horizontal line that all the Fed is kind of at the same level. So right now, I mean, the longer run, somewhere between 2.5 and 3.5, but into 2024, you're looking at the Fed settling between 4 and 5%. But most of them are sitting around 4.25 to 4.5. And right now they just cut the official rate. Let me change the color here. The official rate is 4.75 as of today. And so that looks like there's 1 to 2 more cuts, either another 25, and maybe it's 25 November, and then maybe another 25 in December, Frank. That would get us into where this dot plot sits around 4.25, or it's probably going to sit around like 4.3, 4.6, something like that. It's going to be some type in between number. But most of them see that we're going to be lower. So the majority of Fed speakers right now, Fed members, are going lower. So I would imagine that November, December, still looking for another 25 basis points each, if not having one possibly at 50 basis points. So we'll see, man. But 50 basis points is in. What do you think?
What do you think your plan would be for the rest of the week? Because now we're seeing some high IV and even into the 5,700s on the S&P for tomorrow.
Mm-hmm.
I'm looking at, 5720, which is pretty far off, giving us a $1.40 credit.
Show your screen. So if I see IVX,
screen, right?
Yeah, go ahead. If I see IVX higher, I might not do a lot of day trading, especially if I'm selling options. I don't know. Like today was literally exactly what I wanted to see price action wise, and I got a fraction of the time decay that I usually get. So if we have another like IVX tomorrow that's high in a move that's going to be like 55 to 60 points on the SPX, I might just stay out of the market tomorrow. But I've got positions out to the 20th, the 27th, and the 4th, and the 30th. Like for the next couple of weeks, I think I'm fine. And really, it's just I'm going to go ahead and comb through my portfolio. Can I make any changes? Can I make any updates? I take some profit, manage, redeploy? I'm probably just not doing a bunch of crazy short-term stuff when I think it's potentially a lot of noise. So that's my plan. Is like I just don't want to get overexposed, man. If I'm wrong, I'm wrong. But at least right now we've got some price action that's. I mean, in 5 minutes we just went from 562 to 568. That's a $6 move in the SPY. The SPX probably jumped up. Let's go to, that's a lot of noise. SPX right here. I mean, just in 5 minutes, this candle jumped up 53 points in 5 minutes, and it's right back where it started. So I just think it's going to be a noisy day. We're going to have to let price do what it does best, which is hopefully give us some movement. Now, remember, Powell comes to the podium in around 22 minutes. He's going to start talking. I'm not trading what he says. I just want to see what does price do based on maybe a phrase, maybe something with Q&A. I don't know. But I look at it this way. An easy trade for today, and not necessarily today, but like for the rest of the week, is if we have a big indecision candle, if we just take this low and this high, the Fed might do this for the rest of the day, Frank. It might be just really choppy. We've had several FOMCs where this is exactly what happens, where if you see price come down and test and it rips back up here, comes to the highs and rips back here, what that does is that kills every trader that's trying to go directionally, right? And, if you're trying to sell, like, are you, by the way, are you in that trade? Are you in that trade that you showed me earlier, like looking for that thing to pin? Are you in that trade?
No, I didn't
No.
take it.
Okay.
I wasn't sure. I thought we would get a lot of noise and we get, you know, good volatility so we could have a lot of IV, you know, and there would be good credit on selling that iron condor. But because I felt like, you know, a cut would probably make it move more than, you know, pausing.
Hmm.
That's what kind of kept me from taking that trade. But, you know, we haven't really moved that much. We're still kind of in that range. I kind of want to look at it again and see what the IV or what the credit's going to be for that.
Sure.
Because there's a chance that we do end up here by the end of the day before we, you know, fully digest everything and then make more moves tomorrow, I guess.
Okay. Well, before you start calling tops on the SPX today, let me take a look and see if there's any levels that I should be mindful of. So I've still got the 570 gamma level. This actually has increased in net size. So it went from 1800 this morning up to 2246. This just gives me a little bit more conviction for that trade. Again, I'm not trading it for a 0 DTE. I'm looking to see, can we hit that level by tomorrow? Yes, no, maybe, but that's my trade. And then let me go to SPX here and see if there's any levels to the upside on SPX. So SPX, I've got gamma levels up towards, I just saw that one disappear. We kind of wicked through those levels. You know, you're seeing these move around a lot in real time. So this is a lot of noise. You know, we're getting all sorts of movements from the 5650 area to the 5675 area. If I start to see that these histograms change where my blue, I want to see the blue fill up. I'll use a different color. If I get the blues to fill up to the upside, then most likely that's going to be enough to help drag price higher. If all of a sudden I see my pinks that are filling up to the downside, then obviously that's a greater pull to the downside. So I'm just gonna let this just marinate for a second. You know, Powell's coming in a few minutes here for the press conference. We're quickly fading the news candle right now, which it's fine. You know, is this a buy the rumor, sell the news? Maybe, but the day is not done. And look, don't be surprised if today the market gives us a low and a high, and intraday trading is just tight, right? Like we come down and test and then come back up. We come back and test and we go back down. Like I could see a lot of whipsaw price action today. So just be careful out there. I don't think this is anything you need to chase. I think this is something just to sit back and watch, and then just monitor everything, right? Okay.
Yeah. Especially if we come back to break even, I'm not sure what to assess for that. That might mean that, so if we come back, close around 5640 on the S&P. So basically where it opened up at after the Fed rate decision, after the statement. So Powell's going to talk about like what he thinks is going on, and
Yep.
I guess sort of address the confidence he has in this sort of thing. I feel like he's going to be indifferent again. He's going to sound kind of hawkish, as in like he's going to be very cautious. He's going to be like, we're not out of the woods yet, something very obvious. And he'll probably say something like, we'll cut when we feel like we need to cut again. So that could be a pause next time, whatever. And the market may be swinging a lot during this talk, and then might come back to break even and give them like a day or two to understand and interpret what he said for tomorrow and Friday's move. So
Yep.
I kind of think that we could end up at break even or close to it today.
Yeah. I think the market's going to be, I mean, from what I'm seeing right now is we had the knee-jerk reaction, we fade that entire move, and now we see where the real trading is, right? Now it's right back to square one.
Mm-hmm.
Now we see if the market's willing to actually break and go somewhere, and maybe it does, maybe it doesn't, but I wouldn't be surprised if there's some manipulation here, then it pulls back and it comes right back in the middle, okay? Pulls back up here, I mean, honestly, here's what I will say. If we get another rip to the upside, my 569 call that traded for like 325, I might move it down and try to just trap it. I mean, I want to hit 350. That's my take profit right now. I calculated this morning a 335, and I don't know if I would have been filled on that or not because I saw it trade bid at or ask at 325. But either way, like if we come back up to these highs again, I'm probably just going to take the profit. That's over 100% of the position. So I'll keep an eye on that one. But I'm just watching this on the 1 minute chart. For me, if I've got popcorn, I'm watching it right now. This is where the real trading begins. So Powell's coming to the podium about 15 minutes. I'm still just going to look at real-time news. If Chandler plays the stream over and we can sit here and talk through it, I'm just going to sit and listen. But I want to watch price. Obviously, that's always going to be my my plan.
Yeah.
All right.
So when is he coming out? 15 minutes from now.
15 minutes. I want to see if.
Then?
Well, so I'm going to keep this 1 minute chart up to see intraday stuff on the SPX. I'll come back to this. I'll glance at this every couple of minutes. And actually, you know what I'm going to do? Let me do this. I'm going to quickly shift over. So my 350 credit, I'm going to go ahead and set this with a replace to 325. I'll go 325, and that way I should be able to get out of the trade. And I'm going to keep mine a little bit more open-ended. So for my managed accounts, I'm going to try to get this at 325. And that way those can get taken out for profit. I'm going to keep mine open and see if I can just manage the stop loss into maybe, $3.50 to $4 credits. So that's the one thing I'd like to make an adjustment on really quickly. I just took profit on the 565 by 564. That hit profit. Okay, good. All right, so let me replace this down to 325. Okay. All right, a couple more. 325. And so if anybody has my alert in the Discord, I'm changing that limit to a 325 credit right now. Okay, a couple more here. And had I gone to break even, I would have been stopped out at break even. So that's why I'm keeping it alive. And that's also why I didn't do a 0 DT today, because that it's just crazy how fast that premium changes. All right, 325. There we go. And what would be really nice is if somehow I didn't get hit for profit today, but we gapped up tomorrow and we opened up and I get closed above my limit. So I put in a credit at 325, but we open at 375 or 4. We get the immediate bid and I get some positive slippage with a gap higher tomorrow. That'd be pretty ideal. So anyway, we'll see what happens. All right, so that is all of these. I'm going to keep this one in at 350, but I'll make a quick adjustment if needed. So I'm going to keep this one up to potentially replace and put in a stop loss. So I'll keep that one ready. We're just kind of jumping around between that high and low. Keep an eye on this one. Powell's coming in 13 minutes. I do want to see this, Frank. If I refresh the CME watch tool, I want to see if any of these numbers changed. So now, and this might take a second to refresh, this Fed chart's probably getting watched like crazy.
57. Mine was 57%, 50 basis points, and then 43%, 25.
Yeah, it
so
came.
This
so
might
it
have been
came.
the
It was
first
65.
time they were wrong, right?
No, it was right. It had the higher percentage at 50 basis points. It was correct. It was 65% yesterday, 65% probability yesterday that dropped down to like 57 or 53 today, but it was still favoring that 50 basis points. So technically it's still correct, but it was definitely more of a coin flip today than I was expecting. So, all right, this Fed watch tool hopefully is loading. Come on. I'm not getting a refresh. That's all right. I'll keep an eye on this one. Price action wise, again, let's see if we can come back and retest the high. I might as well just set a chart alarm up here. That's a 5. I'll just set I've got the chart alarms on the SPY already, so I'm going to move this one down slightly, see if we can tap that high again. And then SPX, just good price action. I mean, if you're a price action trader, this is pretty darn good. I mean, for anybody that's going short term, you get in there, tight stop, you're already at break even. You got about 5 or 6 minutes of price going your way. I mean, it's short-term stuff, but believe me, there's some 1 minute big pockets out there that are trading that type of stuff. And this is, kind of price action 101. So something to keep an eye on, but I'd like to see if we tap the highs again, but I think we're going to be noisy within this, maybe Powell can, and again, watch for those fake outs, right? Everyone gets all excited. Think how many people like are dumb enough to buy up here and then they buy and then they get reversed. Think how many people are dumb enough to sell here, then they get reversed. So if it's going to be noisy, there's going to be some like slightly higher highs or slightly lower lows, but those could be traps. So just be careful. All right. What do you want to take a look at, man? Anything? I'll keep coming back to this price on the 1 minute chart. I'm trying to refresh the watch tool. There it is. So here is your, something's wrong with his website because now it says 6.5 to 6.75. That's obviously not what we have here. But I want to see if the other months have been adjusted. Let's go probabilities.
November.
Probabilities. Ah, fudge. Yeah, this thing's all busted up, man. There's probably a lot of traffic on the old Fed Watch tool. But it is what it is. All right, 10 minutes for Powell. Let me see if we've got anything in the headlines. So there's your dot plot.
What do you think
money
of oil?
Markets. I mean, I like oil at support. I've got credit spreads in. Line in the sand is at 65.50 for me, $65. I'm just trying to see if oil will maintain some type of support over the next couple months. I've got November expirations on my oil. I'm trading CL for crude light futures. So I'm going after it's a 1-to-1. It's 50 cents credit for 50 cents risk. But if we stay above 65 or 65, it's profit. So I'm just looking for a little support to hold. Global demand has been sliding, but money supply is coming back. There could be, I don't know, man. There could be a whiff of an expansion still left. It's like, think about this. If we just had a full tank of gas in the economy for the last decade, I would say that we are probably on the last 50 miles where we have the reserve tank, but there's still enough to get us into the rest of the year. There's still enough to get us to our destination, maybe by end of the year into Q1 next year. I'm not necessarily turning bearish until probably after Q1 next year. And when I say turning bearish, it's probably just hedging, but that gives us I don't know. To me, I'm a little bit more bullish, but I think it's necessary that I just have to hedge. I have to hedge. I have to manage risk just in case we have a surprise. But I would say that this market might find a way to ignore a lot of things and just melt up and make no sense other than just trying to go higher. So the Fed starting to cut rates for the first time in 4 years. It does have a good impact in the market. It historically has a great impact in the market. I just showed it, like 20 for 20 with a year out, the market tends to be higher. But we're going to have some volatility along the way. That's not going to surprise anybody. But what has this market done for almost a century? Finds a way to go higher. So it's hard to be a permanent bear. You can take your stabs, but my career will not be defined by I made money during the one bear market that we had. My career is if we have a 10-year, a 10-year trend or 10-year bull market or what we've had the last 20 years, it's been pretty easy to make some money. It's just time in the market. So anyway, money markets see 57% chance of the Bank of Canada cutting by 50 basis points in October. This is another thing too, Frank, just talking on currencies and other central banks. Now that the Fed has cut and come out swinging with 50 basis points, you got to wonder where those other central banks are going to fall as well. Bank of Canada, I could see cutting aggressively. ECB, they already cut by 60 basis points, so they're going to cut more by the end of the year. Bank of England is actually tomorrow. Their forecast to be the same. They're not looking to cut. But we have Aussie employment, New Zealand GDP tonight. We have Bank of England tomorrow. They're expected to pause at 5%. I wonder if they're going to cut with a surprise forecast. Yes, no, maybe. I don't know. And then BOJ overnight on Thursday to Friday. Who knows what they do? They're probably not raising rates, but the Nikkei, for example, I haven't really looked at the Nikkei today. Nikkei is right here. Boom. Nikkei is just it's volatile. I think Nikkei is gonna. I think we're gonna deal with the Nikkei inside of this range for a while. This could be a lot of noise in here in the Nikkei. I'm interested actually in establishing longs on the Nikkei at those lows. This is a 27% discount. If this offered a 27% discount in the S&P, I would buy it 100% of the time. Even if it went down 40 and 50%, I'd still buy it because that discount for me, after some point in time coming back up to those highs or a discount lower coming back at some point in time, I'm buying those discounts. So I treat the Nikkei the same way. And maybe that's that's my little revenge on the Japanese yen for all the annoying things they give us as currency traders, is trying to just buy some heavy discounts on the Nikkei. So
the unpredictable yen,
or
BOJ
yen.
rather.
The incredible
Have
edible
you taken
egg,
a look at the yield curve? we're still back in normal levels. We're at 0.06. I thought we would have like a greater move as a result of this, but we're still, we were inverted. Now we're in the reversion territory.
Has there been? So. Yeah, we're disinverted now. I did see that the 2 and the 10 are still disinverted by about 10, 9 to 10 basis points. I do want to watch this though. So the immediate reaction here is we're up off the lows on the 2-year. We're up off the lows on the 10-year. We're up off the lows on the 20-year. So I mean, I want to see where the numbers settle. It's a little bit easier to go to a different. Hang on, I'm gonna go back to SPY here, and let's go to this chart for the daily. Let's go to that 2-year, 10-year, 2-year. So, pushing to fresh lows, pushing to fresh lows. The bond market has been pricing this in. This is basically the bonds telling us, yields are dropping. Bonds have been rallying. TLT's up above 100. Is it possible for TLT to hit, 105? That's a symmetry move, maybe. I don't know how much uglier and nastier the yields get to the downside, but we're gonna find out. I mean, I mentioned this. Was it this week and last week? I said if we're gonna see like another kind of expansion in the market, we might have to see the 2 and the 10 go from disinverting and reinverting. So they'll pull one out of the Maverick playbook, and we were inverted, right? Yes, I know the finger goose. All right, that's old school. That's not Maverick. That's the original.
Yeah, probably went over.
Yeah,
went over.
Come on, man. We don't know any 80s movies here. All right. Somebody's asking, what about the dollar Swiss? I'm still buying the dollar Swiss, like a fool, but I'm buying the dollar Swiss. So we're at 0.84. Here's my weekly. I have a trade pending on the dollar Swiss at 8,200 and 8,000. So I'm still going to cost average into the dollar Swiss, just because like that was an intervention level. Are we going to flash crash to 7,000? I don't know. But if we have some type of like 1, 2, 3, 4, 5, if this is some type of 5-drive or 3-drive pattern, perhaps it comes up and strikes these highs again. But if it goes lower, I'm still willing to kind of scoop it up at these. I mean, this is a 15-year low, and any lower than that, it's never been lower than 2011. So for a 30-year chart, I'm going to buy and enjoy a little bit of carry while I can. So if it's 4.75% for the Fed, Swiss National Bank comes out next week on Thursday for a rate decision. I would love to see them cut as well, if possible. So that's what I mentioned before. We will have to keep an eye on the central banks, because right now, all central banks are leaning this way. They're cutting rates. The BOJ came from negative to 0 to now positive. The BOJ is here. Okay. And then all others are going from high and then cutting down. So is the BOJ going to stay? Are they going to go up more? And so eventually, yes, this carry trade does unravel. But if I see cuts in the Fed, cuts in the BOC, cuts in the Bank of England, and the ECB, the carry trade looks less and less attractive. But if I can still maintain some type of positive swap on the dollar Swiss, I will. And I'm going to continue to go after that. So
then dollar yen today is down over 1%.
Where is it going, up or down? So the dollar's dropping, the yen is up, so it's heading lower. Okay.
Yeah. So if we take out those lows at what is this, 139.6? I don't know.
Yep.
This has been one of my main indicators to look at downside in the markets.
Sure.
So when did this drop?
Well, it's funny.
July 11th. That was an early. Go ahead.
Oh, I was going to say, like, you say this is the downside in the market. I mean, look, dude, this dollar yen is lower. What's the S&P done? What's the Dow done? Like, I mean, this inching lower doesn't mean that the market, I don't know. I don't think the market's just turning, but I don't know. I mean, BOJ is coming out Thursday to Friday. I don't mind this trade. If I get a long position filled, if I did like a buy stop on the dollar yen, it goes higher. I think that's an easy, like, tight stop loss, and see if we get some type of like radical BOJ policy where they say all the right things and the market rips and all of a sudden the Japanese yen gets weaker. If it gets weaker, I mean, that's an easy trade to the upside, but I would not take a Japanese yen trade without stop losses, or stay the heck out of it and just stop following the yen. I mean, I look at it this way. If you didn't trade the yen with this drop, you kind of missed it. And you had, 2,000 pips to go after. So I don't really feel like participating and chasing what could be very volatile, very choppy. Who knows what it wants to do. And I don't know, man. I guess I don't care enough to like try to grind on the yen when it's such an unfavorable currency pair to trade sometimes. So just not my favorite. So yeah, I'm expressing my personal beliefs in the Japanese yen, which I don't love. So, but I feel like if you missed the 2,000 pip move, going after it now feels like, what are you doing? You missed it. You missed the big move, right? A little bit lower. Yeah, sure. Maybe you'll go down to 130, 128. I don't really care. I'd rather see if I'm going to short it. If I want to short the dollar yen, it's going to be here. We got to pull back first. Then I can look for more. If it just goes, I'm not trading that. I'm just going to stay out of it.
Good afternoon.
So I want to see
it's
some
not
structure.
My colleagues and I remain squarely focused
it's not
on
a trade
achieving
I'm
our dual
looking
mandate
for. It's
goals
just an
of maximum
indicator. So if it
employment and
keeps
stable
falling,
prices for the
I'm
benefit
gonna
of the American people.
probably be looking at
Our economy is strong overall
the
and has
downside
made
on the
significant
S&P and stuff
progress
like
toward
that.
our goals over the past 2 years. The labor market has cooled from its formerly
Okay, let's see what old
overheated
Paul has to
state.
say.
Inflation has eased
Probably
substantially
not.
from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In
Still
July,
not a
you
lot
said
of
you weren't
movement
necessarily
on the
thinking about a
S&P.
50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong.
I think
Core
this
GDP
is
running 3%. So what
this
changed?
is a bit of a reassurance to the markets right now. I think Powell's trying to say all the right things. I just typed that in the chat here. You know, I'm not saying they've declared victory on inflation, but this sounds a little bit like he's leaning that way. Like, hey, look, we know that we talked about 25, but 50 with our dual mandates and everything. So I don't know. Price action leads, but
let me jump in.
a little chuckle from old
Since
Powell.
the last meeting, the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout.
Got kind of quiet.
We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do. And we concluded that this was the right thing for the economy, for the people that we serve. And that's how we made our decision. So that's one question. What was the second and
How
third?
do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher?
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect in the base case to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of a decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
Chris, do you have any
I think
final
we had
thoughts?
a good discussion.
I'm putting in a trade. The dollar's sing right now.
I talked about
I'm
this
just
in
watching
Jackson
price
Hole. I
action
didn't address
unfold.
the
It looks like
question
it's
of the
noisy.
size of the cut left it
So I'll
open.
just
I
continue
think
to
we
monitor
left
and
it
see what
open going
happens
into
for the remaining
blackout.
day and tomorrow.
And so there was a lot of
But I
discussion.
put on a trade. I'll post this
Back
in the
and
A1
forth,
trading
good diversity
Discord
of
for the
division.
dollar
Excellent
Singapore.
discussion today. I think there was
Nothing right
also
now.
broad
Like it's a
support for the
long term.
decision,
It's a big picture play. So
that the committee voted on. So
the dollar is
I would add, though,
breaking
look at
lows
the
right now. I
S&P.
mean, the currency
All
strength chart shows dollars getting smoked. The yen is on top along with the Kiwi. CAD is weak, dollar's weak, but we're still looking at noise. with the S&P. We didn't break the immediate 2 o'clock news low. We didn't break the 2 o'clock or 2:05 news high or 2:10 news high. It's choppy, and there's Q&A going on with Powell. We could see this being like noise, but tomorrow's a new day, and expect this type of anticipated volume is probably getting released into the market tomorrow. So I'd say Thursday, Friday, just be nimble, I guess. I mean, either you've got positions out further so you can eliminate some of the noise, or you're just going to trade pseudo. I mean, look at futures, man. I mean, futures has been just choppy. These are 5-minute candles, 5-minute candles, like super choppy on everything. So futures is hard to trade. There's no trend, price action here, and it's just garbage. So not bad, but no real direction. So I say tomorrow's a new day. I hope that my 569, 570 levels get hit. Those are the big gamma levels, but I did see about 500 net disappear out of that 2,500 current net position. So it does show there's been some dumping on the high side. So I think there's probably a little bit of a reducing exposure at this time. So yeah,
I think that my final thought is if we close close to break even, that will help reaffirm my idea of limited upside. I'll probably look to continue to sell calls or credit spreads above price. Depending on where it goes tomorrow, maybe take some credit spreads, above the all-time highs. And then I have my VIX plays for October 2nd.
Okay.
So yeah, we'll see. But I'm not really seeing a whole lot of bullishness, and obviously I can be very wrong about that. But we'll have to see where it closes today, and then if it's kind of break even, I'm probably going to be less bullish and more so on the short leaning side. But that's all I got. And gold. I think gold is going to be
highs today.
Yeah, it's going to be an easy winner if we can get a pullback on it. I want to pick up some of GLD, but yeah, regardless where the economy is like not as bad as we thought or whatever, we're still devaluing the dollar. Gold trades directly against it. I think gold is a good long play for Q4 and possibly all of 2025. So
yep,
those are my thoughts.
I like it, dude. I'm posting this chart right here and posting this in the Discord. So I've got 3 entries in on dollar Sing. I like the play. It's definitely a long-term play. I live there. That's the only reason I like to trade it. I think it's pretty firm between like a 120 support and a 130 to 140. I think the Monetary Authority of Singapore likes to keep it there. So it's not even close. We're trading at 1.29. I'm literally waiting for price to drop 800 to at 900 pips before I get in. But I'm going to set it out there. This is one of kind of my big kind of investment plays on Forex. So it's one of many. All right, man. Well, I'll let you go. I'm actually doing another session here at 3 p.m. So I'm going to start that up here in just a few minutes. But it was nice to kind of get through this with you, get through the noise with you. It kind of did what you and I talked about offline as this was all coming in today. It's like much anticipation. You can see the aggressive nature right at the news, but it was the immediate reaction and then just no follow through. So tomorrow and Friday, brand new days. And I'm curious to see if this actually moves the market tomorrow pre-market, like after the bell closes today. Where do things move around? What do we do coming into opening bell tomorrow? Is there like gaps up or gaps down? We're about to find out. So anyway, Frank,
Yeah,
I'll see you tomorrow, dude.
we'll see. Yeah, thank you, and good luck on your next session.
All right, thanks. See you, everybody. Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.